All right, nice. Welcome to Forex Fridays with Deontay. I hope you and your loved ones are safe wherever you are in the world. Tonight, we're going to be talking about our weekly range review, as always. That's one of our first topics. The second topic we're going to go through is NFP or non-farm payroll ideology. And we'll talk about how I like to approach NFP days, or if I do look to trade that day, how would I go about it? We're going to also look at bullish versus bearish months. We're going to talk about the characteristics of a bullish month and a bearish month. And then after that, we're going to talk about lower time frame fractal ideas, mainly around swing points. That's what we're going to be talking about during all the kill zones or just what we see overall in price structure. So let's jump right into it. So we're going to share the screen. Everybody should be able to see the screen now. You should be looking at dollar. Everybody should be looking at the dollar index. So as always, we've got the weekly range review. We have the opening price. Now, if you're new to this, channel, or you're new to the information, or you're new to Forex Fridays, is your first time watching it, the weekly opening price is going to be our natural price indication or indicator solely from the market. The opening price of that weekly candle becomes our premium and discount territory. So when price moves above the weekly open, it's in a overbought condition. Very simple idea. It's higher than the open, so it's more expensive. When price goes below the weekly opening price, it's decreasing in value and it's at a discount. It's a lot cheaper. That's where the market's most likely oversold. You're looking to find ideal buying conditions here. Now, with that premise in mind, look at how today's weekly range cleaned up. It went from making a high on leave Monday. Tuesday looked to almost break it, but it doesn't. Monday makes the high of the week very early, and price sells off all the way into Friday, all the way into NFP. Now we know the dollar's been bearish based on the daily updates and what we've been speaking about. Since we're tracking EU, we see all the dollar crosses moving higher. And you can see all the DXY and all the US dollar quoted currencies are going lower. It's like UCAD, USwissy, UJ, you see all those going lower. And you even see the yen crosses going lower. So this is not a big surprise to us that the market is trending lower. Notice we have two things we have to talk about on Tuesday, the London model and the New York model. So we're going to talk about how you could potentially look to go short based on the daily draw or the weekly draw around this ideology. So blending some ideas here. So let's take a look at the London Open. Let's go down to the 15-minute time frame. So the London model is going to be utilizing a time session right before this short window of time. It's a very small period of time. And I like it because it's more systematic and it's just objective. The way I trade this way and the way I approach it, I think is very objective and it's not subjective because we can all see these levels. We can all see when the market starts to consolidate, and it's generally inside these dead zones. We can see price is extending though during the session. Not saying it's not a surprise, but more times than not, this time period is consolidating. Midnight to 2 a.m., maybe even midnight to 1 o'clock, because I know some people start their kill zone at 1 a.m. You're most likely going to see a consolidation here. You're going to be looking for that consolidation to be the start of all markets. So you're basically resetting the market because if we're going off of based on what ICT claims the market should be moving, right? According to IPTA, the interbank algorithmic price delivery, right? If you believe in that ideology, you believe in that methodology, you believe that all markets start in the consolidation. And that's what you want every single time. And after that consolidation, you're either going to go into a phase of expansion. After that, you can either get a reversal or a retracement. And there goes your four phases of the market. This is the opening price that I use. European Open, 2 a.m. here in New York Eastern Standard Time. That same idea, this is the weekly opening price, is applied to the kill zone's opening price. So we'll just say SOP, Sunday's opening price, weekly opening price, tomato, same thing. You can see at this time period on a Tuesday, price is above the weekly opening price. We already have bias that the dollar is most likely going to continue selling off going into this week. We're waiting for counterparty liquidity pools to be taken out to follow that trend. That's just normally your best setup if you're going to follow any trend. If the market's going down, you want to see something on the lower time frames intraday rating buy stops, especially clean highs. Play it forward. You can see here, price rates that swing high. People ask me all the time, what is a swing high formation? Right? I don't know how to define it. I don't know how to classify it. A swing point, not a swing high or swing low. I'm defining a very neutral thing, both of them. A swing point is a candle between two other candles. So you can see this swing high is between this candle and this candle. The candle on this left and the candle on this right, right? It's homie on the left and this other homie on the right. The three amigos, right? The three friends right here. This high or this friend or whatever is lower than this high up here. Same thing on the right side. This high is lower. So that makes this a swing high. That's the definition of a swing high. Vice versa. A swing low is the same thing. It's a 3-bar formation. Doesn't matter the time frame you're on, because we can see these same ideas on the daily chart. Weekly, 4 hour, 1 hour, it's the same thing. It's all fractal. That's a swing low. What makes this a swing low? Because this candle on the left has a higher low, and this candle on the right has a higher low. So that makes that swing low between these 2 points. The candle that's lowest between 2 candles, that's a swing point. It can't be equal, because then that would be a double bottom. We'd be classifying something else. This is a swing low. Sell side liquidity resides below these lows, and buy side liquidity resides above these highs. Significant short-term liquidity pools are being built in intraday over and over and over and over again. Price rates that. We like that because, one, it brings itself above 2 a.m.'s opening price, while also with double confluence of being above Sunday's opening price. We can also see it's above midnight opening price. If somebody had asked me earlier today, they had messaged me and asked me, why don't I talk about midnight opening price? The main reason I really don't talk about it is just a lot to talk about, because I do talk a lot and I have a lot of things to talk about and try to explain. The midnight opening price is here. It's the same idea. It's above in a premium. Midnight opening price is 12 a.m. noon, not in the afternoon, 12 p.m. This is 12 a.m. So here in New York, 12 a.m., everybody would be sleeping. Everybody has already came home from work, finished whatever they had to do, whatever duties they had throughout the day. By 12 a.m. here in New York, everybody is sound asleep. It's midnight opening price. When price gets above it, it's in a premium. And when price gets below it, it's in a discount. It's the same idea. Notice for this day, it's stacked. There's 3 confluences here. It's above midnight opening price, Sunday's opening price, or the weekly opening price, and 2 a.m.'s opening price. 3 confirmations of it, market being very overbought. Price could have also taken out the previous daily high. That would have been the real kicker there. Fake run on buy stops above this high, raids it, buy stop, raid, and then it goes short. But it fails to break that high. So you have 2 high points, because this is going to be the new previous. This is going to be a high on Tuesday going into Wednesday. You'll see what I'm talking about, because this is a high point and this is a high point. 2 high points. You look down here. You're looking for what? Mitigation block somewhere between these lows, between these highs. Sorry, this swing point and this swing point. And you'll see it on the 15-minute, the 30-minute, and the 1 hour. But back to the kill zone. We're looking for a 1-minute fair value gap that runs through a swing low, and that swing point or that swing low is inside the fair value gap. What I like to do is go from the 15-minute time frame down to the 1-minute time frame. Now, I know many people don't trade dollar. I know many people don't trade dollar. I know it just went blank. I just muted myself because some people are gonna ask. I think the audio cut out. I just muted the microphone so I can cough. I'm looking for a swing low to be broken with a fair value gap. You can see that's that 15-minute buy side liquidity. That's that 15-minute swing high. That's how it looks like on the 1 minute here, the 1 minute time frame. Because I know we have a few or a handful of new traders that are watching as well. So I'm trying to make it as simple as possible. This is buy stop braided here. And it's good to see that when you're looking for short opportunities, because the idea that I truly bank on is people are looking for a break retest. That's what I think retail traders are trying to do. They're trying to draw something like this. That was not too bad for someone that doesn't ever draw things like this, but it's basically some type of channel or something that they're drawing. Retail traders have this on their chart all the time. I don't believe in it. Not to say it can't be a profitable setup or idea, but not something I think has sound logic. 15-minute swing high broken, that's objective because we all can know what price point this is. We all can see on TradingView it's that exact price point. It's not something somebody drew with a trend line. That's very subjective. Let's play it forward and see if we get right there. So quick. Happens really early. So there's a purge on buy stops, and now here comes the fingerprint, the market makers or the algorithm, or whoever you believe controls this price action. There it is. That's a fingerprint. It's some type of code, right, to the market. And every single time when I study it, at least, right, when I started to observe these things, I was like, wow, every single time it does the same pattern over and over and over again. And it's really a strong opportunity to catch it in trend of the market at this time period during London and during New York. Play it forward. There it is. Price taps right into it. What would we do? We would go short on the discount side of the fair value gap. Slow it down. This is a fair value gap. 1, 2, 3. Takes 3 bars. 1, 2, 3. You can also see we're breaking structure to the downside. We're rating what? Swing lows. 1, 2, 3. 1, 2, 3. So there might be a change in trend that may occur. And we're going to take the best possible entry point because of this indication here. This fingerprint. This generic, very unique, specific way it just drops down like this, breaks this swing low. It's not going to look perfect like this every single time. Sometimes the fair value gap is a little smaller. Sometimes it's a lot larger sometimes. But it's always a swing low that is in between a fair value gap. It can't be a swing low that's at the start of the fair value gap and at the end of the fair value gap. It must be in between. Just clarifying. It also breaks multiple swing lows inside this fair value gap. Not to mean it means any, more significance because it broke multiple swing lows. But you can see all those swing points are inside that fair value gap. You even have, I think, one more. Now, see, this one wouldn't count, see? Because it lines up with the end of the fair value gap. We wouldn't want to take this one if that's how the entry would have looked. We go short at the discount end of the fair value gap or the dead point of the fair value gap. So where it ends here, that's where we're going short, right? Institutional order flow drill. That's what you're basically doing. It's nothing very special about the idea. It's just the first opportunity you get to go short in. And we got 15 ticks for 15 ticks on the DXY, and we would look to see if price respects that. Let's play it through. And we pull back into that range again. A little bit of drawdown, but not for long. And you can see we are profitable leaving the London session. But before we get into the New York session, I just want you to look at this and notice how it gave this formation to get lower and to target that 15-minute swing low that we marked off earlier. There it is. It goes that 15-minute swing low. Tonight's going to be a long one, but it's going to be a really good one. 15-minute swing low because I'm going to be very thorough here. 15-minute swing low. There it is. It went from buy side to sell side liquidity below that swing low after taking out the 15-minute swing high. Absolutely a pattern that I see very often. You would need to have context that you believe that the market was going lower and you saw that the trend was going to go lower. And we talk about many ways to predict trend and how to anticipate it a lot better. All the things we talk about at the beginning episode of the daily updates for the new month, that first episode goes over exactly why I think I'm going to go short for the month, or why I think this pair is going to be bullish or bearish, etc., etc. We talk about all the things and tools that are needed. But look at how it's so methodical and selling above 2 a.m. opening price. Let's just forget, as if let's just hide this real quick. Let's say this wasn't here. Say all of this stuff wasn't here, and it was just, we weren't talking about the weekly opening price. We weren't talking about the midnight opening price. We're just talking about the kill zone's opening price here. Let's just forget about those things existing. Just based on this idea and the way it formed, you can tell that the market was very strategical in wanting to sell above 2 a.m. They give people false hope that it's probably going higher 2 times, and then it sells off. Someone said in the chat, same thing occurred in the higher time frame, daily, weekly. Of course. Why would it not? Because the price is fractal. It should show in the daily, and it should show in the weekly. If we look at the weekly candle, we can see that price is above the weekly opening price. We'll talk about that a little later at the end. 15-minute swing low is taken out, and that is sell side liquidity. 15-minute sell side liquidity. The market is open for liquidity pools, and that's what it did during London, going towards the higher time frame premise of a lower dollar. Play it forward, and now we go into now the next model. Now let's just scratch this whole idea and active in, we're not even in the trade, like we're not even pertaining to that. We're just talking about New York session now. Let's say we didn't take the London trade. Basically what I'm trying to spit out to you. Let's say we're not looking at this anymore. We're looking at 5 a.m. to 7 a.m. There's another dead zone. Market, for some particular reason, and we know the answer to this, but for some particular reason, the market is consolidating between 5 a.m. and 7 a.m. Always. You don't have to look far to see this. You will see this pretty often. The market is going to consolidate here, or it's either going to give you a deep retracement, or it's going to start a reversal during this time period. But the fact that one of those conditions is a consolidation, that tells me I should move away from this time period. Out of the 4 think about that. Out of the 4 phases out of the market, all 4 can occur during this time period. And the fact that one of them is a consolidation, I don't want to be in it. Yeah, this is the London lunch. If I said something wrong, completely backwards, I apologize. This is the London lunch, correct? 5 a.m. to 7 a.m. This is the Asian lunch. If I didn't title those properly, this is the Asian lunch. So I know people are going to ask, what time is that? This is the Asian lunch session, or the dead zone, another dead zone. And this is going to be from 12 a.m. to 2 a.m. You would consider this a live zone, right? If it was opposite to it, it was a live zone. And this would be 2 a.m. to 5 a.m. Then the next dead zone that you have here is going to be the London lunch. This is a dead zone, another one. You shouldn't be looking to trade here. This is going to be 5 a.m. to 7 a.m. Next kill zone, right? New York kill zone. Another live session or live zone. You want to be trading here. Now, there's going to be some things that tell you, oh, you should opt out of trading London, and it's mainly because if you see the Asian session in a very lengthy extension, don't trade the London session. Meaning, if the Asian session doesn't really show a strong consolidation and it's not within a certain pip increment, let's say 20 to like 40 pips, if it's larger than that, most likely there's signs that London session may not be a feasible session to trade. So there's small things, subtle things that can kind of gauge you on should you be even trading London session, because if the Asian session has already run, 20, 30, 40 pips, might be unideal to trade this. It's not the most realistic thing to trade. It may consolidate because the daily candle has already ran, a large amount. And as you study, 5 p.m. is the new start of the daily candle, not midnight. I know it's a lot to take in. Some things you're like, wait, what? It's not midnight that starts a new daily candle? No. The new daily candle starts at 5 a.m. And I think for gold, it's an hour later, so 6 p.m. This swing low here is sell side liquidity. This swing low here is also sell side liquidity. We have no 15-minute swing high going into 7 a.m. broken. So we don't even have a swing high eligible. We can't take this one because this swing high here was broken before 7 a.m. Right there. 20, if it's smaller than 20, if the Asian session is smaller than 20 pips and larger than 40 pips, you most likely would not want to trade the London session, especially if there's no news present there too. So if the London session has no news, it might be not the most reasonable time period to trade based on those conditions. Not saying every single time, but it's just an indication. Someone had asked in the chat. This is buy side rated before 7 a.m. So we wouldn't consider this a feasible buy side rated. So we can't take that. Neither is this one. We'll take the highest high that forms here at the end of this candle here, and we'll use that as our buy side liquidity pool for the London lunch. So that's how I frame whether or not I'm going to be using the lowest low that forms at 7 a.m. or the highest high that forms at 7 a.m. on the 15-minute time frame. So go 1 minute. So there goes right there. That's 7:15 candle. And price runs it right there. You still have these clean lows here. Once again, on the 1 minute time frame, this is how it looks. It looks completely different. There's a lot more data here. You can see it's engineering sell-side liquidity. And what I mean by engineering, it's creating the liquidity pool. The market itself, right? The entity itself is coming down and creating these lows right here at this point. For what reason? I don't know. I'm not going to try and say I know the answer to that. But for some reason, the market is stalling here multiple times, runs up and pulls itself down and stalls within a region of time. You can literally see how tight range this time period is on the 1 minute. It's not making significant higher highs. It's not doing this. The whole entire time it's just doing this. Coming back into the range, going back up out the range, back into the range. That's where we want the market to start. We want it to leave that area, especially creating those bottoms, and run right through it. That's what it looks like. And how we get the entry from the 1 minute time frame, because it's not that I started in the 1 minute and I predicted this. I framed myself, right? I framed the way this was going to look on the 1 minute time frame for me. Other people may be framing it differently, but look at how it's framed for me objectively. I know what levels I want to reach. It's not that I picked out a fib level or I used some indicator level. I picked out objective levels based off of the 15-minute time frame. I'm looking for a short opportunity because I know we're above the weekly opening price. Let's go back to kill zone. This. There we go. So that's Sunday's opening price here. We're above Sunday's opening price again. The weekly open. Expensive. That same idea I was talking about. We're expensive for the day going into Tuesday during the New York session. We're also above. Where are we at? It's 7 a.m. That's 7 a.m.'s opening price as well. Coincidence? I don't think so. I don't think so, because we see it all the time. Even on the days we probably aren't looking to trade, we see this kind of movement in price. It's so rigged. It's all rigged. It's all fake. Entire market is fake. You can see it. Price moves itself above 7 a.m.'s opening price, above Sunday's opening price, above, let's see if it's above midnight. Yeah, above midnight again. Not sure why my midnight line is. Oh, yeah, there it is. Midnight opening price. Look at that. Triple confluence again. It's expensive, very expensive going into the New York session on a Tuesday, ideal trading day. Play it forward. There goes a fair value gap. Same pattern, right? The same exact pattern. There goes the swing low. 1, 2, 3. There goes the swing low. This happens after it breaks this high. After it breaks this high right here, then this forms. It's not that it forms without breaking this. Sometimes it will, but if it's not in this, if it's not in these steps, I'm not looking to take it. That's just the way I designed the model. I don't want to take it. I want to see the fair value gap breaking a swing low and the swing low staying inside, being inside the fair value gap after breaking the buy side liquidity pool we framed on the 15-minute time frame. There again, we would be selling in a premium. Overbought territory. Once again, this is DXY. I don't see people talking about DXY this way. People don't talk about DXY, especially on a lower time frame like this. There it is. Going short. So remember that London setup was still feasible too. Still holding that. And look at that. Price drops. TP. What is it running to? All the sell side liquidity pools that it was engineering. Even the ones outside of it, right? There's liquidity pools that are being built in London session. I'm not telling you you're stuck within these couple of hours, 5 a.m., 6 a.m. I'm not saying you're stuck in between those hours, and that's only going to be your liquidity pools, because it's also creating liquidity pools in London session. Anything that's in the past of the market, that's created liquidity. It's a constant flow. It's always creating liquidity pools, and it's always destroying liquidity pools. It always happens over and over again. It's a cycle, flip, back and forth. It's the same thing with large range versus small range. It's creating and it's destroying all simultaneously. It created this high point, destroyed it, and now started going lower to destroy the ones it created in the past. There goes the swing low. There goes the swing low. All clean lows. Even this one, look at how it runs through the London low. The London session's lowest point. You can see how New York session runs right through that too. So it's not just this too. This is just an easier way to frame it. But you can see there's a run on that sell side liquidity below these lows. What are retail traders doing? Trend line, right? Break. We're going long. And even then, so like sometimes they'll do this. Break. Retest. We're going short. It could work out. I don't ever say it doesn't. I just don't think it's realistic in all conditions. Someone said, why do you use a recent swing low? Why don't you use the previous swing lows? Which swing takes the buy side liquidity? Interesting question. I'm not sure what you're saying there, but If you could rephrase that question. Of course, it's generating swing lows here too, like all there too. We can see the most recent liquidity pools that's it's creating. Yes, sell stops here, of course. Sell stops here. And you're going to see, we're going to talk about that fractal idea at the end. I feel like I know what you're getting at, but we'll see. What if there isn't a SOP? What if you don't have Sunday's opening price? Then just use midnight opening price. If you don't have Sunday's opening price, just use midnight opening price as your line in the sand for the day. And if you don't have Sunday's opening price, you use the midnight line for Monday all the way to Friday as your Sunday's opening price. If you don't have Sunday's opening price, use Mondays as a Sunday's opening price or weekly opening price, because that's what your broker is showing you. It's the start of the week and he's using Monday's midnight opening price, so use that. If you don't have Sunday, don't use Sunday. Use Monday. Cool. Glad to answer your question, my friend. Nice. But you can see how price is selling off here, and it drops dramatically right here at 10 a.m. start of London close. And I would only guess it had been news for the market to move like that. Yeah, of course there was news. For the market to drop off like this, what was this day? PMI market dumps here right at 10 a.m. But notice how this news is in the direction of the higher time frame trend. It's going down. We were already in the market. This is why I ask people. The people say, "Oh, how do you trade news?" Two ways you trade news, in my opinion. You're already in the market prior to the news dropping, and you got it 100% right. You got the draw on liquidity right. And the news is more than likely going to pull you in that draw a lot faster. Or at times, there's going to be a fake move against the draw to get retail traders on the wrong side one more time and to knock people out of the right way one more time, and then it drops. And you'll see that happens a lot during NFP. Man, today is going to be a great lesson. A lot to talk about. Like you'll see there's little things that you have to look for. But that's how I'm framing myself for the New York session. London lunch. If you're not comprehending this, please go back and watch this. Rewind it. We talk about it every Forex Fridays. And it's the same idea going into every kill zone. I don't know what is more simpler than trying to explain it this way. I know there's other people out there for sure that are doing their thing, and I don't discredit them because real game recognizes real game. You know, if you're really doing it, you're doing it. But there's a lot of garbage out there. So just be careful. Let's go on to, I think, UCAD next. I think that was the only day. Yeah, I think I'm doing one description of a setup for each one. So one day. So that was just Tuesday. Tuesday was the best one to point out. So we didn't look at Monday, Wednesday, Thursday, Friday, but based on the idea, an all perfect scenario of it selling above in a premium and also given the triple confluence, it happened on Tuesday. So that's the one I'm pointing out here. UCAD. All right. News packed week. This week was packed of news for every currency, every country, packed with news. There's a London model on Monday, there's a London model on Tuesday, and there's a New York model on Wednesday. We're going to go through all three. We're in a premium. Look again. Look at how the market's forming. It created the high of the week on Tuesday for UCAD. See, it's completely different from dollar. Dollar made the high on Monday, but UCAD made the high on Tuesday. Happens. It's not that the dollar and UCAD are going to be simultaneously making the exact same highs every single day and the exact same lows every single day, even though they're directly correlated. It's dollar versus Canadian dollar. This is the quoted currency. And up here, the first currency that comes before the slash, right? This is the quoted currency. The currency after the slash, that's going to be the one that's going to be the base, right? Quoted currency and our base currency. And anytime Canadian dollar increases in price, this will only mean UCAD will go lower. Vice versa, if dollar were to increase in price or if Canadian dollar were to decline in price, dollar is going to go up, and this pair is going to go up itself too. It's selling at a premium. You had three opportunities potentially to find a short to see price going lower. See, I said it back. I always do this. I feel like I have ADHD or I have something. Like, I swear I always do. I say a lot of things backwards. It's something I realize I do this all the time. Base currency, and that's the quoted currency. Base currency is US dollar. The quoted currency is Canadian dollar. I always say things backwards. Apologize. Thank you in the chat. So let's take a look at Monday. 15-minute time frame. Man, I love y'all. Appreciate the community, man. Let's get to 2. All right. You see we have no swing low that's rated. So we're going to have to take this as the lowest low. It's all the way down here. That's going to be our sell side liquidity. But for our buy side liquidity, see what we got. We don't have any swing highs, but we have this double top. Or we would say the highest highs of the session. So that's what we would take here. So this is midnight again. This is midnight opening price. This is 2 a.m. This is the opening price at 2 a.m. Play it forward. UCAD number dollars bearish. So we know that UCAD most likely is going to trend lower. And Canadian dollar futures should be trending higher. Breaks the buy side liquidity right there. Let's go on the 1-minute time frame. What are we looking for? We're looking for price to create a fair value gap that runs a swing low. There it is. Very quick. Happens really early in this session. There you go. What do you do? You're going short again. It's the same fingerprint I just showed you on DXY is showing here on UCAD. Can't be random. Played out. Price sells off. Look at how it engineers itself back into 7 a.m. and then it moves higher. See that? Look at this whole structure to the upside. Pulls this all the way up into a premium again. It's the whole reason why we have a stop loss. That's why I like to use 15 pips. Many people keep asking me, why do I use 15 pips? Because I feel like it's just the golden stop loss when it comes to intraday trading on the lower time frames. And you hold that trade. The only reason you can't hold this trade is because you're risking too much. Point blank period. If you're risking way too much, you can't hold this trade into drawdown because the drawdown itself is most likely hurting you. And you can see we get stopped out there. But always a learning lesson. Take partials, and not everything is guaranteed. Just like how you see here, nothing was guaranteed here. Price came down, gave us a little bit of an opportunity, came back up, and the trend changed. And we got stopped out. You're not always going to win every day. Because people always, you only show winners. Here we go. There's a loser. This is a Monday. Not really an ideal day to trade. I don't like to trade Mondays. But based on the conditions, it looked like it was a feasible setup. Everything always looks as if it should be working until it doesn't anymore. That's how it goes. We all sign up for it. Let's play it forward. We got Tuesday. $5 a.m. Same thing. We don't have any swing high here, so we have to take this highest high here. Or this 7 a.m. candle isn't breaking a recent swing high. Is there any recent swing high that it's breaking here within this time period? No, it's not. So we have to take this as our buy stop, right? Buy side liquidity. Those are where the buy stops would be residing. Sell stops would be below the swing low because it's trying to prevent selling. That's why it's called a sell stop, because people put a stop loss, which is classified if they're buying a sell stop. Get me out the trade if it continues going lower at this point. I can't adhere any more risk there. I want to be taken out the trade. You have the opening price. It's 2 a.m. We're above. Once again, weekly opening price down here. All the way down here is the weekly opening price, Sunday's opening price. I want to be very clear. Because sometimes I get questions. I'm like, dang, I thought I was clear enough on it. Sometimes you might not be. 1 minute, we broke that 15-minute swing point or highest high. And we're looking for what? Fair value gap. Not just any fair value gap, right? Because there's one here, right? There's one right here. It's really tiny, which could be used as one, but it's not the one we want to seek out. We just don't prefer it. We don't prefer it. It's really small. You can see it right there. There's a small fair value gap, but that's not the one we want. We want a fair value gap that's going to be running a swing low. So we opt out of that fair value gap. We don't take that one. Play it forward. This one happens really quick too. There goes the swing low. 1, 2, 3. There goes the fair value gap. Same pattern on another day, Tuesday. Same idea. Swing low, fair value gap. Don't want to confuse anybody here. You look to go short because we're what? We're bearish on dollars, so we should be bearish most likely on UCAD too. We can make that assumption as well. And price action will show you it too. You go short, price tags is in short there. We're selling above 7 a.m.'s opening price. We had here some drawdown, and price comes back. TP. Even at this point here, I wouldn't give up on the trade. I'm going to hold it through because that's the whole point of your model. You want to stay on course. There might be signs that would tell you to get out, and that will come from experience and edge, right? Something that told you, hey, gut feeling that said, hey, I should get out this trade. It's most likely going to run my stop. Sometimes you are right. Sometimes it doesn't. You get out too early and it comes back into profit. So hold it through. You have to have that confidence, honestly, to do that. But hold it through, and you need to risk properly, because if you're risking 3% right here off that entry, and it pulls back, and you get a margin call, it's on you. The trade is going to collapse. It's going to close itself. Or let's say you are just over leveraging, and you're playing with no stop loss, and price moves up against you. You just gambling. Risk properly, because anything in the market can happen. That's what Larry Williams said in his book. Every trade, you need to go in thinking the worst can happen. The very worst will happen as soon as I put on this buy or sell. It can completely go against me. So just because the fact there is risk, I'm going to take calculated risk. I'm not going to risk my entire account. That's the whole point. That's risk management 101. You're not risking your entire account per trade. Play it forward. And then eventually we see price take out this low here. Notice how price is going into consolidation again, though. Look at that. That's 5 a.m. going into 7 a.m. Look at the consolidation again. You're telling me you want to trade that? No, you don't want to trade that. New York model. You see, ultimately, man, it just sells off going into the news. PMI. How do you trade the news? You either are in it before it drops, or you look to see if there is a counterplay against where the market is really drawing towards. Look at how the news pulls it right below Sunday's opening price and reverses quickly. Reverses immediately during what session too? The London close session, 10 a.m. to 12 p.m. Quick reversal back up, changing the trend. It's all rigged. What are you going to do? You're trying to predict when it's going to do these moves. $5 a.m. to 7 a.m. That's the dead zone again. It's the same where you start consolidating here. Look at how it's consolidating again here at set point. And the PMI numbers for Canada. Sell side. Because we don't have any swing low. So we're taking that lowest low. We have to take that one. We have no other choice. We'll take this one here. This is a swing high. That's the opening price of the session here. Where we're above Sunday's opening price. Let's play it forward. Price runs that, which we don't have to necessarily look to take as a long opportunity. We can see how price does run it. Could there be a long here? Yes, absolutely. But are we looking for a long? No. We're most likely looking for a short. We want to see price run back up above swing high formations and then look to go short, be a counterparty to that. 7 a.m. But there could be a long setup here. Price can still produce a long setup even though it's above the weekly opening price. This is why I say sometimes retail traders are forced to buy at a premium. Sometimes retail traders are forced to sell at a discount, which is completely ludicrous, but you have no choice but to. Unless you wait for those conditions where everything lines up and you get the best sell. You get the best buy. Look how quick that is. Look how quick that one candle, that 1 15-minute candle is. Runs all the way back up to buy side liquidity in one shot. Now it's what? Expensive. It's expensive. It got back to midnight opening price again. Look at that. There goes midnight opening price right here, 12 a.m. Look at that price. Gets right above it again. Rigged. So rigged. Pulls itself above midnight, a premium territory again. Pulls itself above 7 a.m. Opening price, premium. Pulls itself above the weekly opening price. SOP. Premium. This is Wednesday, another ideal trading day. Going into a kill zone, following the higher time frame premise. Lower dollar, lower CAD dollar, higher Canadian futures. Look at that short coming in. All the way back down. Back down to what? The liquidity pool that it created, too, within the 7 a.m. kill zone. Right here. It takes out its own liquidity pool that it just created during the session. Let's go down to the 1 minute time frame. Looking for what? Some type of fair value gap that runs a swing low above 7 a.m. after rating this. Can we take this fair value gap? Yes, it could. We could. Is that the one I'm preferring? No, because sometimes I find that this could pull me into drawdown. There's also a Larry Williams smash day candle idea here. So the candle that actually breaks or runs the high, right, and closes above all the other highs is normally going to be where the reversal is going to occur, because this looks like, lava is just spitting out of a volcano. It's just going to keep going up higher and higher and higher and higher. And it looks like it would never fall. But then all of a sudden, it turns around real quick. Catches a lot of traders off guard here. You could just tell. This one candle here, a lot of traders are upset. They're like, dang, what the heck? What just happened? And that's where you start to see people getting stuck into a paradigm. Okay, I'm going to buy again here. This might be a new opportunity to buy again. Let me buy. Let me keep buying. Let me keep buying. And then eventually that optimism fades away. And then it just completely melts on them. And they keep risking this thing. I can make it back. I can make it back. And you don't make it back. You take the loss, move on, bro. I know with experience, you will come back and be like, yo, I can mitigate these losers, within the next couple of minutes. You could. Sometimes that comes with skill and edge. But that's not the average. That's not the average person. Think about that. The average person thinking about trading and trying to trade, they're not going to be that, top percentile. And I'm not saying I'm that top percentile at all. Decent, you know. Price sells right off of that fair value gap. But look at where our entry technique is. Where our entry technique forms is right here. Once again, fair value gap, swing low. What the heck? A whole nother day and different kill zone, and the same coded fingerprint is showing again? Nah, I don't believe you, Deontay. The market can't be rigged. But I'm showing you the same entry over, hits it. Like I said, every time I like to draw it up so you guys can get a gauge of it. 15 pips. 15 pips. It's crazy. Someone said in the chat, Kenny, the Sunday opening price and midnight opening price I never heard of until I started learning it from you. It's out there because it's a natural thing. I feel like it's a natural thing because I don't trade with indicators. So how else am I going to know if the market's going to be overbought or oversold? We have to look at the open and bid. If you go into a car show and the open and bid on this car is 10 grand, that's where it starts. No one's paying a premium for this car and no one's paying a discount based off of the auction price. I'm not talking about like the real market value and et cetera, et cetera. Based on the auction price of the car, it's 10 grand. If somebody came in, right, a buyer said, "Yo, I'll take it from you at 10 grand." It's and the buyer takes that offer. It's sold at 10 grand, unless someone bids it up higher. Nah, you know what? I actually want that car more than that guy, so I'm gonna bid a little higher than him, so that the seller is more interested in me, and I'm gonna say, "Yo, I'll take that car for 20 grand instead," and then you see it go up. And then someone else comes in and says, "Yo, I'll take that car for 30 grand. Now I'll take that car for 50 grand." And now you have a bid war going on. People just yelling back and forth, like, "Yeah, I'll take it for this. I'll take it for that." And then you start to see slowly but surely the person that's the seller, they're probably cheesing at this point, grin to grin, cheek to cheek, because their product that they're selling now or the thing that they're trying to resell has built in hype and it's going to be sold much more for what it started off as. Same thing here. Let's say this was the starting price of that car at the car auction. Price does what? Price gets expensive. They keep bidding on this car. It keeps going up. Eventually, the seller is going to take that offer, right? They're going to be like, "Oh, you want to buy this car from me at 60 grand? Sure, why not?" When it was actually put out for 10 and it's 60 up here for it now, I'll cash out on that. And they cash out. And then you see the market drop. All that hype goes away. It completely loses its value. As soon as it's sold, instantly loses its value. But there was hype built in, engineered liquidity. They engineered this right here. They engineered it right back here between 5 a.m. and 7 a.m. They were already engineering the liquidity pool for this short. It's some crazy stuff when you start to see it this way and you start to think about it being rigged this way at certain times. Let's play it forward. And price takes out the sell side liquidity again that it created here, came out and took it out. Continues going lower. You can already see like more abstract idea. You can see what this is a high point. This is a high point. This is the lowest point. What is this? What is this? It's your mitigation block. It's gone. It's gone. Actually, no, it's your breaker. It would be a breaker based on what I'm showing you. It's a breaker. So price makes a high. Price comes down and makes a low. Price then runs that high and then returns back to the low after creating that high. Got a breaker on your hand. Boom, price drops off. You can see it's all fractal. It's all fractal. See if we can go on 5 minute and show it. a little different. You got a high point here, or even here, highest point here, runs it, comes down. Price gets close, very close into it. And then price continues to sell off. All the way from that one trade idea, going into the news event too. And it sells off even more. And it goes into Thursday. And you see that one trade idea, that one-to-one idea just turned into much more. Now, the question is, people will ask, well, should I be holding it? Of course. You want to make more money, hold it. If it's possible, right? If you get lucky after this trade idea and you're able to get 15 pips and you only take off 80% off the trade and you want to hold for lower price action, you can totally do that, my man. You don't have to ask me to do it. Don't ask me. Do it. It's going to benefit you. If you can get a trailing stop after getting a successful trade, why not do it? It's only the cherry on top. You waited that long to get that one setup. Might as well try and see if you get any more. You've already paid yourself, right? You took 80% off the trade. You didn't close the 100% of the trade. Let's say you take 80% off the trade. You drop a standard. You take off a point. You take off a 0.5, off the trade. You take off a 0.7 off the trade. You got a little bit left. You got a point. You got a 0.10 left on the trade, and you hold that with a trailing stop. And if you aren't stopped out, then great. You get a lot more bang for buck, and you get to see the unrealized gains if you would have closed, and it's all good. Price continued to trend for a couple of 80, 90, 100 pips at times, just off of one turning point idea. Think about that. That one idea, that exact entry, price never returns back into that stop loss. That's absurd. Whatever we did here happened to fit the analogy and to fit the codes of ones and zeros, right? For this to continue to sell off here. That one moment in time, we just caught it. It wasn't any late. It wasn't even that it was delayed. It happened exactly when we needed it to happen. And it continues to sell off into the next day. Interesting things that we see in the market. Very interesting. It's all rigged. And that's the New York model for UCAD. You can see all those ideas started happening where? In a premium. But the daily time frame was already suggesting that we were going to go lower. And dollar was suggesting that. Even if the pair itself that you're looking at does not suggest it, another asset class or a correlated or inversely correlated pair can also show you signs that things are going to start changing in this pair as well, even if it's not as obvious. That's why you need to have an intermarket analysis. You can't just watch UCAD by itself. You're cheating yourself by doing that. You have other things to look at to give you more clues and ideas. Look at the other pairs. They will help you. I'm not saying you have to trade the other pairs, but if you're looking to just trade a particular pair, use the other pairs to help you gauge what's going on here. If you see UCAD going down, Swissy is going down too. UJ is going down too. We don't even have to look at the charts to know that. If we see UCAD going down, we know it's directly correlated to Swissy and UJ. It's going to sell. So on those pairs, if I wanted to get a little more over on the market, I could dabble in those pairs as well because I have that insight. I have a small edge. Not saying it's a major edge, but I have a small edge that these pairs as well are gonna sell off. I found a sell setup in UCAD. There's probably a sell setup in UJ that's happening simultaneously at the same time. There might be a U Swissy sell signal happening at the same time UCAD is doing this. Let's look at the inversely correlated pair. So now we're looking at NU. So I try to switch the pair every week. It's not the same one every week. Try to switch it up. So last week, I think we looked at GU, I believe. And now I'm looking at NU for our inversely correlated pair. So you can't say, oh, you're just picking one pair over and over again, and it's only being shown in these pairs. These other pairs don't do it. They all do it. It's all rigged. Don't let nobody else tell you different. The market is rigged. It's so rigged. You can see it. I keep showing the same idea in principle every single time. It's a natural thing because it's coded that way. I'm not sitting here saying, oh, it's something that's fictional. No, I mean, fictional. Something that's fake. This is real. It's happening. Every week when we got a possibility of price drawing higher, we look back and see that it drops below Sunday's opening price. Why? Because it wants to get the cheapest buy to continue trending higher. It needs sponsorship. It needs to get the cheaper buys. It needs to engineer those sell stops so that we can run the sell stop and then go higher. That's all we're trying to do. We're trying to be counterparty to those raids once we figure out the draw on liquidity, the daily trend, the weekly trend, the monthly trend. So we have 2 models in one day. Now I'm gonna just ask the chat, is everything I'm saying right now making sense? Anything confusing? Anything you want me to just go over one more time before we move on to the next topic? One thing. Talk. Because I'm gonna just keep showing the model. I'm glad it's clear, my friend. Good. Oh, you sent a picture. Ha. All right. That's gonna be an interesting one. I'll have to give that one a second. I think that's the open. Just looking at this on the 15-minute time frame, look at what we see. This is the London session setup, and look at how it runs up to get there and back to Sunday's opening price. But there's an entry that's happening right in here. Even though it looks like it's consolidating, there was still an opportunity here because the market may not start gauging itself right away and during London session. It starts to pick up after and then going into New York. But we still were able to get the entry before the news event, PMI, and price going higher. Notice as well, counterparty liquidity pool is being rated here. Right here. That swing low is rated there. It's below 7 a.m.'s opening price. Here, it's also below Sunday's opening price. It's also below midnight opening price. See, it's always there. Just because I don't mention it doesn't mean it's not there. It's happening. It dropped below midnight opening price. Someone said, "How do I approach price after it moves?" I'm gonna read your chart, my man. It's just like it's a lot to look at real quick. How do I approach price after it moved out of the premium for the week, like UCAD on Thursday? You continue if the market's going to continue trading higher. Like I said before, you're forced to buy in a premium. Remember that you're now forced to buy in a premium. What are you going to do? Even though price is above Sunday's opening price, you still look intraday for price to dropping below midnight opening price, the actual day, or dropping below the kill zone's opening price. You're going to be forced to buy in a premium because if you miss the best buying opportunity or selling opportunity, you are now not capable of getting those best opportunities anymore. You are now forced to do things out of nature, right? Or out of unideal conditions. You have to. You have no choice because the market is trending. How else are you going to get in? Think about it. The reason why I tell you you're forced to do it is because if it's trending higher and you miss the best buy, you think you could rewind time and find that buy again? No, it's trending higher. So what, you're going to just give up on the uptrend and you're going to try and go short on it? That doesn't make logical sense, you know? And that's what some people do. Think about. You got to think about all the scenarios that people think. All these human beings and all these different, you know, expressions or scenarios that are happening with people because, there's a spectrum, from the lowest of the low to the highest of the high. My scenario is stay off. You can do that too. It may not be the best buy. And it may not be the best sell. But if you're not confident enough and you're not that experienced yet, you stay off. But if you know market trend, like I said, I'm gonna show you bullish and bearish conditions. If you know if the market's gonna trend, you should be a lot more confident in holding trades higher or lower. If you're not, it's okay. You'll get there. This it's just only a certain way of thinking. You can't limit yourself. Don't limit yourself. You're much more than what you think you are. You can do a lot of stuff intraday trading that leads into swing trading. It's the same thing, hand in hand. I'm swing trading, but I'm showing many opportunities. What are the targets? The if they look back data range highs, or if they look back data range lows, or the daily chart swing highs and swing lows. Jeez, you guys are asking a lot of questions. I wish I could answer all these questions in one shot. But I show this all the time. Where's the draw on liquidity? I hate to do it, but just to jump off again. Look at all the draws. We've been talking about it the entire month. We've been talking about the draws. The entire draw. EU is going to go higher. So where is it going to draw to? Higher time frame buy side liquidity. How are you framing yourself? Top down or bottom up? Because if you're framing yourself bottom up, lower time frame to higher time frame, you're not marking off significant liquidity pools. We went from the daily time frame and said, okay, this is a buy stop. 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 Are those not projections? Are those not targets? Absolutely. I'm showing it to you, Kenny. You can see it. Swing lows or if they'll look back lows. Those are all projections as well. So let's say if the market were to go short, where would I be projecting price to go to? Previous daily lows is the most obvious objective level. All the previous daily lows, obvious levels. But outside of that, another level above that, a swing low, right? The market's creating the liquidity pools and destroying them. So the same thing that's happening on the 1 minute is happening on the daily. It's creating daily liquidity pools, swing lows, swing highs. You're just seeing it on the 1 minute with a lot more information in front of your face. There goes your projections. How else would I be able to trade EU in this direction? I'm just aimlessly firing. I'm not aimlessly firing. I specifically said, oh, we broke a swing high. We may break this swing high. I didn't mark it off, but it's there. Another swing high. And price is going to continue to trade higher if to look back 20-day high. So we just sidetracked, but swing low broken. Remember, dollar was down this week. We want to see New Zealand dollar go higher because dollar's weakening. So New Zealand dollar should be going up. So go down to the 1 minute time frame. This is 2 a.m. Same premise, guys. Different pair. It's not rigged. It's not rigged, right? Oh, it can't be. The market can't be rigged. It has to be rigged, guys. How else did they create it? Someone had to create it. We're all trading it. It's all ones and zeros. It has to be rigged. It's fake. It's all fake. And it's a sad thing to say, but it's all fake. We're trading off of a speculatory market. It's all fake. None of this stuff is real. None of it's real. And the quicker you come to that realization, the quicker you're gonna start to understand why price does what it does, and you'll start to explain it in a certain way, in a certain method. We're looking for a swing high. Probably happened. Yeah, broke here. Swing high. Keep playing it forward. Keep playing it. Keep playing it. Nothing. 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 There it is. See, this one happens a lot later. You got to be attentive. People are going to ask, but shouldn't it happen at the beginning of the session? Or should it happen at the middle or the end? I don't know when it's going to happen. I just want to be there aware during the entire kill zone. That's why you got to be there early, 2 a.m. to 5. Sometimes it happens very early in the session. Sometimes it happens at the very last couple of minutes of the session. Press play, price taps right into that fair value gap. What's the scenario again? 1-to-1. 15 pips for 15 pips. When is this entry occurring? On a Tuesday. On a Tuesday, guys. So it's a Tuesday. It's only certain days that it's happening on that the market makes the lowest low of the week or the highest high of the week, and then it just takes off from there. Press play. It's still below. Look, that's midnight opening price too. Still cheap. All this is cheap. Though, like I said, though the London session didn't look too fancy, there still was an entry in there that could be held going into the next kill zone. You can't just give up on the trade. The daily candle needs to expand. There needs to be a daily range expansion. This is where the IQ comes in. You know, the daily range expansion needs to either be large or small, and we can predict that. If yesterday was a small daily candle, today might be a large candle, and there might be a lot more in the market that needs to go, especially if you're targeting certain levels, right? Look at how this candle opens here and reaches all the way up here. Think about that daily candle here, how it went from small candle to large. It still had a lot more to go. And you knew your obvious area for it to draw to was that swing high. Buy stops. Runs right into it. And if it's going to keep trending, it's going to keep doing what? Taking out buy stops above swing highs. Same thing in the daily. So you still think that this candle is going to expand higher. If that's your conviction on the daily time frame, you have some type of liquidity pull on the daily time frame. The New York session, 15-minute time frame. Let's scratch everything we just talked about London session. Let's just talk about the London lunch session. We're going into a news event, kill zone. At the end of the kill zone, there's going to be a news event, PMI. This is 7 a.m. Meanwhile, we're still below the weekly open. We're still above this. We're below it. Always saying things backwards. We're below it still. That's 7 a.m. That's a midnight opening price. Right here too. Look at all the confluences adding up for this one day to be that one shot, one kill. Basically what I'm showing you. Not saying I would have caught it, right? But I'm saying if you had to go through it and do it yourself, you'll see that the ideas are always there for you. And you want to be taking it towards the trend, especially when the market starts trending. Price takes out that 7 a.m. candle low or 7:15 low right there. So that was our sell stops. So you got that intraday liquidity pool. Those are your projections here on the lower time frame at least, right? Intraday, swing high here. You're intraday trader, you're a day trader, so you're looking for these setups. You're a scalper for sure. If you're a scalper, you're looking for these setups. Buy stops, buy stops. 7 a.m. runs that low. So it's purge. So we take that as a purge. Doesn't have to close below it. Doesn't have to give like a rejection or something like that. I just want to see it cross the line. Once it crosses the line, it's broken. That's it. It's just like playing American football. Once the player crosses the plane of line with the football, it's a touchdown. Done. It's a goal. Doesn't have to make a candle that closes below it. I don't know where people get that stuff from. It's broken. Once it boom, there, done. It's broken. The line has been broken. It's crossed the plane. Crossed it right here. This one happens early. See how this one happened early? The London session entry happened really late. Look at how the New York session one happened very early. Here. Find us a swing high. Yep, there it is. These are double tops. This one and this one, but this is a swing high. It makes this a triple top, of course, but this is a swing high. Why? Because look at the candle on the left. Lower swing high, lower swing high. These can't be a swing high because the candle on the left is lower, but the candle on the right is equal. So this is not a swing high. That's double top. This is not a double top. Here and here. But here on this plane of line, you can see it's like a triple top or some type of resistance, right? Retail traders would call it that. 15 pips, 15 pips, done. Where's the entry tech? I'm gonna ask the chat so I can engage with you guys. I want you guys dozing off. Got to be attentive. Where's this entry happening? Is it in a premium or a discount? Physically, where this entry technique? Where is it forming? In a premium or discount? Anybody in the chat, type something. Thank you. Discount. Thank you guys, fam. Appreciate y'all. Tapping in a discount. That increases the chances of this trade so much higher. Just me waiting for that price being below in the discount for the kill zone. Just let's say we're just talking about the kill zone itself. I know we have the other confirmations and confluences. Midnight opening price, yes. Sunday's opening price, great. But just the kill zone itself, based on the idea of rating sell stops and looking for price to go higher and buying some type of entry down here below 7 a.m., the trade idea becomes a lot more successful. The rate of this trade winning becomes a lot higher. It's not that you're selling up here, you're not buying up here, because we know there might be pullbacks that we can't stand if price gets up there. Someone said in the chat, so if I'm correct on your entry, you're not looking just for a break of a high, but a dynamic impulse break with a fair value gap with a swing confluence within the fair value gap. Yeah, that's basically it. Correct. That's exactly what we were just waiting for, a swing low. What about my someone said question? Geez, your question was an interesting one. Let me see. Buy side taken. Why do you use this swing low? Because that's the one I. Why don't you use this one? Because it's not inside the fair value gap. I answered this question. Your picture in the chat. I wish I could screenshot this and show this to everybody in the thing. Actually, I can. What am I talking about? Oh, someone else said it. Send a chart. Can we open this image? I downloaded it. Okay. I'm gonna share the chart with you guys and what this person had sent. Entire screen. I downloaded it like 3 times. Buy side taken. This is completely I'm trying to show y'all, right? Trying to be as respectful as possible. I show the same entry over and over again. Why don't I take that one? Because sometimes that's the one that fails. Simple. The reason I'm taking that entry is because that's the one I see getting much more results based on back testing and data. And just seeing it every day. I'm showing you the same entry every day. So there's no reason why I would sit here and say this entry is not feasible. Show it every day. Been showing it for the last 3 months. Showed it for the Asian session model every single time. I'm taking that fair value gap in that one because it's more dynamic in price action. It doesn't lead me into a lot more drawdown when I flip the coin. It's all probabilities here. It's not that I'm saying this one is guaranteeing me a successful trade idea. It's more than likely to give me a guaranteed trade idea. It's probabilities. I'm flipping the coin. And I'm always going to flip the coin and want this entry. I don't want the other entry that you're showing here. That first swing low, I don't want that one. The swing low needs to be inside the fair value gap. Hopefully that answers your question, my man. Same thing. So it's the same constant flow. Same thing here. I'm only taking that fair value gap. Even if there were one, I wish there was an example. There's definitely an example like this. Even if there was another fair value gap that formed, like in your example would basically be like this. So price comes down, breaks this, right? Comes up, and there's some type of fair value gap here. And it comes up and it does this one. And then there's that second fair value gap. This is basically your same description in price trading that and going higher. I don't care about this one. Point blank period. I don't care about that one. I care about this one. Because I see that's the one price normally respects. That's what my eyes have been studying. And that's the whole reason. There's no fancy explanation to it. saying, oh, because something special about this one. It is special, but it's like it's just the one that we see consistently being respected a lot more than often. I'm not sure how to put it in words for you, but there it is. There goes the entry technique. Price goes higher. Now, respect. I'm glad that you were just curious, and I'm glad to answer your question. Hopefully, it answers your question. But you can see here, price goes higher. Price continues to go higher, taking out buy side liquidity and trading higher. That 1-to-1 scenario, 15 pips, we just basically turned it into basically a 2-to-1. Look at that, 30 pips. So 15, another 15. So we got a 2-to-1 ratio. Woohoo. But it all started off with the premise of the 1-to-1. I start everything on a 1-to-1 basis. I'm not already trying to project a 4-to-1. I don't care about the 4-to-1. In order for me to get to the 4-to-1, it needs to be a 1-to-1 first. You just can't skip to the 4-to-1. It's always going to be a 1-to-1 scenario. And there it goes. So let's say we got the 1-to-1. That's why I say you got to pay yourself. Even if you would have got this 1-to-1, could have immediately just sold off. But instead, it gave you more than what you were looking for. And that's why I say sometimes hold on to the trade. Don't block your blessings. Hold on to the trade. Let's say we held this trade. Let's hold this trade all the way through the rest of the week. If all things went well and you were not stopped out, right? And like I say all the time, odds of you getting stopped out is very high. The market pulls back. The market does retracements. The market raids sell stops. It raided all these sell stops that it made it here. You can see it in that pullback right down there. It runs everything back down here again. What are you going to do about it? Can't do much if you have a trailing stop below the low. That's why it feels like they know where your stop losses is. Like, it all depends on what you believe. Some people believe that the market makers can't see your stop loss. I don't think they can. In my ideology, right? In my belief system, I don't think the market makers can see my stop loss. I just don't. I just know they're in competition with their own selves. They're not in competition with me and my liquidity. Bro, what? My liquidity is nothing, bro. No matter what $1 million funded account you have, it ain't nothing compared. It's a fraction of the size of what they have on the table. Infinite. It's crazy. They can do whatever they want. That's how I see it. They can do whatever they want with the market. They're buying and selling against their own selves. They created this with their own orders. I didn't create those lows with my orders. It's not possible. Then they run it and then it goes back higher. What are you gonna do? What are you gonna do? You gotta live with it. And we wouldn't trade that time period either, because that's what? The dead zone. That's the dead zone. We wouldn't trade this time period anyways, because that's the dead zone. But if we're able to get a runner and the dead zone does not knock us out, congrats. Congrats. More blessings to you, man. Hold your trades. Believe in it. Believe in the trend. Take the trade in the trend and hold. See what happens. Do it in a live. Don't do it in a live. Do it in a demo account. I'm always saying everything backwards. Do it in a demo account. Don't do it in a live account. Get accustomed to it, so you're not so fearful. It feels fearful to buy when price drops down. I understand now. When you see it going below the weekly open, people will tell you, "You're crazy. Why would you buy down here? It's clearly selling." That's what they will tell you. Right? Right or wrong? Right or wrong? That's what they would tell you. They would tell you, "Yo, bro, it's selling. Why are you buying?" That's what they would tell you, bro. And then it goes back up. And then everybody's like, "Damn, bro, you went against us and you actually got it right?" Nah, that was just luck, bro. That's what they would tell you. I promise you. Other people will tell you that. When I started learning this stuff, people were like, that was luck. That was rigged. You got lucky there, Deontay. That entry technique, it's random. You just happen to pick a random fair value gap. The fair value gap that you're picking is just like, it's just a random one. No, it's not. It's the same one I show you guys every time in the same sequence over and over again. Like I said, it's coded. It's like ones and zeros. I'm taking a certain code of line and trying to find that code of line to enter. And that code of line is the same sequence over and over again. Swing low broken, 1 minute fair value gap that breaks a swing high, and the swing high is inside the fair value gap is the code that I'm trying to catch. Boom, take that long. Vice versa. It breaks a 15-minute swing high. That's the first sequence of the code. The next sequence of the code, price needs to create a fair value gap that breaks a swing low. And that swing low needs to be inside the fair value gap. There goes my short entry. And every time I plug it in like that, I tend to find success. It's funny, but it's that simple. It's that simple. And I can only think other people that I've learned from to have come to this conclusion. It's not that I'm the first one to discover this. I'm not. And there's probably plenty of other people out here that probably know it, and they're not doing it publicly. They don't care. They don't want to tell people. They just want to make their money in silence, in peace, which is cool. But there's some people that want to be educators along the sides and want to help other people along their journey and create a better space for the community. And those people are publicly putting out for the community and trying to help others to understand and comprehend it. People can easily learn this stuff by themselves and not tell a soul. Why tell other people? I'm making 6 figures. I'm making 8 figures, right? I'm making millions of dollars. Why do I have to tell other people? I'm not saying me. I'm making all this money. I don't have to tell people. All the way into NFP. Phew, still going, man. Oh my gosh. And think about that. That one entry turned from a one-to-one scenario and turned into probably what? Just eyeballing it. Probably turned into what I'm thinking probably 18 to 1. Let me see. That is 140. Just roughly about just drew the measure in 140 divided by 15. That's about what? Nine and change. So like a 9 to 1. Basically, that's what happened there. So we got a 9 to 1 scenario. So we went from a 1 to 1 scenario to a 9 to 1. One shot, one kill. It's basically what I'm basically showing you, one shot, one kill, and people are not even seeing that. You know what I mean? Like you understand exactly what I'm talking about because you're on page. Someone said in the chat, passing a prop challenge with one trade. One trade, right? One trade. I said one model will set you up for life. One model will set you up for life. And I think this is the way. This is the way to go. You're going to see a lot more success doing this. This entry happens below the weekly open. Happens on Tuesday. Happens after a small range candle too. Monday, a lot of consolidation. And just for fun, I'm gonna clear it off. I don't trade NU. I used to back in earlier years of my career, but you can see small down candle. Look how large the candles start getting throughout the rest of the week. You can see it every single day. Price drops below the open. Drops below the open. That was the drop below the open on Tuesday here. Was that Tuesday? No, Wednesday. It had been Wednesday. Going into Wednesday here. Correction, Tuesday. Tuesday. Technically it's Wednesday. It's funny. Now I'm gonna explain this too. Technically it's Wednesday. Based on the way I drew the chart on the 1 hour, so I draw everything from the 1 hour like this. And you got midnight opening price. Because we're using IPTA true day open for the start of the day, quote unquote. When the algorithm will start gearing itself to its new premium levels and discount levels. We're not using the 5 p.m. opening price because that's where the new daily candle actually starts. So since the 5 p.m., let's say it's Tuesday and it's 5 p.m., the Wednesday candle is already on the chart right here. So you have a little bit of the central bank's dealers range from Tuesday setting into Wednesday, basically. Asian session is a part of Wednesday's candle. It's all a part of it. So not to confuse anybody, but yeah, something you'll see yourself as you start trading. And yeah, power 3. Always going to be accumulation, manipulation, distribution. You're always going to get an open, high, low, and close every single time. So you're trying to trade in the trend. This is how you do it. You don't see nobody else showing it besides, like this at least, besides a handful of people. Only a very handful of people are wanting to show price action this way. And I think it's very simple. So we're going to move on to the next topic. If you have any questions, please let me know now. If something's still unclear, please let me know now. I'm going to drink some water. And we're going to jump on to the NFP ideology. This is a good one. All right. Yep, news events, basically, but mainly NFP. So NFP, let's talk about it. Let's see. I had this set up on a certain, unless I didn't draw it out. Yeah, I probably didn't. So NFP, we're going to be talking about the ideology, and we're going to be first starting looking at gold, UCAD, and DXY. We're going to look at some ideologies and methodologies behind it. So when it comes down to the news event, this is what I think. And this is the way I think, in my brain, at least the way it works. News events in general, especially one like NFP, high to medium impact, right? All the news events that really drive volume into the market, there's an injection into the market. To me, I look at news and my belief system in trading as the excuse to move the price action quickly and dynamically. That is one thing I think about the news events. The second thing, when I think about news events and the way I think it impacts the market, it is constantly luring traders to the wrong side. It's inevitable. That's something that always happens in the market. There's always inducement. There's always a Judas swing. There's always people on the wrong side of the market. FOMO is being created. They're chasing it. It's always happening. Always. So that's what I think news really does too. It brings a lot of people to the table to start betting. It allows people to get more comfortable with the market, feel a lot more, trustworthy of the market. And as soon as they get in, it just dissipates in front of their face. So that's what news does. It creates FOMO. Now, when it comes to trading with news sessions, you want to know what the draw on liquidity is first and what your lower time frame short-term liquidity pools, which is based off of the dead zone. So I want you to take a look at NFP on Friday for gold. So let's start off with the first example. So we're just going to be looking at 7 a.m. to 10 a.m. and not anything that happens after. Looking at it, you can see it looks very whiplash looking, right? Just comes down and then back up and then back down and then sideways. It looks like a roller coaster. But when you look at this on the lower time frame and you frame it the way I frame it, it becomes a lot more concise. Let's take a look at the example. So for you, we're trading the New York session and we're trying to base off of short-term liquidity pools. We're using that dead zone. Do you see the dead zone? I thought it was going to show it. Dead zone's here. 5 a.m. to 7 a.m. What phase of the market is this? Can anybody tell me what phase out of the 4 phases out of the market? Trying to get some engagement here, right? So you're not falling asleep. Out of all 4 phases of the market, what is that? It's the London. Correct, guys. Chat. Correct. So it's the London lunch. But what phase of the market? There we go. Consolidation. Yes, that's the answer I was looking for. So out of the 4 or chop. Yes, consolidation. So the market, good answers, guys. Way to get it back on tune. So consolidation is the phase that's happening here. So out of the 4 phases, we got consolidation. That's where all markets start. especially before NFP, right? We could see the market started getting very quiet, very quiet. Everybody's just waiting for that last boom. The hammer comes down, right? Lightning strikes, and then thunder follows after. Framing our body pool here, watch how you're able to still trade NFP because it's rigged. Because it's rigged. Oh my gosh, when you see this, you're gonna be like, dang man, it still works on NFP days? Yes, it does. Because it's all coded. It's just a lot violent. And at times it can draw much further into certain ranges of liquidity pools. It could instead of just drawing 10 pips above it or 15 pips above it, it could draw 40 pips above it, right? During that news event, and then drop back down and then take out sell side. Or vice versa. Price comes down, then the news event drops and it goes even lower, and then it goes up higher. What does it do in that one move? It stops everybody out. Stops everybody out. Swing low, swing high, swing high. We got the framework. I framed it for you guys already. Boom, 15-minute time frame. It's done. It's framed. You got all your liquidity pools to go trade New York session. Forward, forward, forward. Question. More engagement here. Told you guys this is gonna be a good one. What is happening here? What can we say? What would Deontay most likely say after breaking this swing low? What is retail traders doing? What do I say all the time? Anybody can tell me. When price breaks that swing low, they're chasing, bro. Oh my gosh. Thank you, fam. Thank you, guys. They're chasing, bro. It's night and day that people are always chasing price. If you roll the dice and we had to take an educated guess on how many people went short here, whether that's from a range of one, from a range from 0 to 1 or a 5, it's definitely one person. At least one person is chasing price. At least one. And if one is doing it, that means there's probably other people doing it too. So thousands of people, millions of people are chasing price. So there's money being put into the market outside of the commercial speculators. And who do I consider the commercial speculators? People ask me this all the time. It's my belief system. So I could be wrong, right? I may not know this is the true answer, but everybody believes in something. I'm not religious. I'm not highly, highly religious, right? But I do believe that there is an entity that's bigger than us that created everything. I definitely believe that for sure. Do I know what it is? What it looks like? No, I don't. But I know there's definitely something bigger than us on this planet Earth, in this galaxy, that made everything. It's the same thing. And people, like I said, people believe in religions. They believe in this God, in this scripture, in this book, in this story, in this folklore. It's the same thing when it comes to your trading ideology and methodology. What's your belief system? I believe the central banks control price. Hands down. Who else is bigger than the central banks? Nobody. Nobody's bigger than the central bank. They could print money all day if they wanted to. They could make up liquidity all day if they wanted to. No one's telling them nothing. I know, bro. It's crazy. It's crazy. Nobody. Nobody is bigger than the central banks, bro. They run everybody's lives. Think about it. They're the whole purpose of whether or not your dollars are going to increase in value or decrease in value. And look at what's happening through all the countries over years, even before I was born. I'm only 25, turning 26. This has been happening way before me. The markets have been doing this way before me. They control everything because you need to trade your time for money. And who controls the money that flows throughout the country? Your central banks and all the other systems that the money flows into. In and out the country, trades with other countries, consumerism, retail stores, etc. Whatever, the whole economic system from the bottom up, top down. But where does it come from? It comes from the central bank. So they got to be the kings, right? Or they've got to be the queens, or they got to be the entity in the marketplace that controls what we see in price action. And that's what I believe. They're the top of the pyramid. We're the very bottom. When I say we, I'm talking about small speculators, retail traders. We're the very bottom, the basis. And as you go up, then you have the large banks. You have small private investors. You got large funds, etc., etc. But as soon as you start pushing boundaries to the central banks, there you go. Pinnacle of the pyramid. That's how I view it in my belief system. You don't have to believe what I believe, but that's how I believe it. And they sell it here. Get everybody short. They are like Bitcoin, and we're like something like that. Yeah, I can't say that. um, 7 a.m. opening price. That's the raid. 7 a.m. Notice that we're below New York session's opening price. The news event NFP is right here at 8:30. That's the news event at 8:30 right here. We're looking for the entry technique now because it broke the 15-minute swing low. So that's the first code of commands. Waiting for a fair value gap now. That breaks a swing high. There it is. Happens just before the news event too. Like a couple minutes right before the news event. There it is. There goes your swing high formation. There goes the entry technique. We just looked at like almost like 6 examples, 10 examples of this. Goldie. 1-to-1 scenario. Make sure I did that right. All right, 15. Yep. All right. Let's play it forward. Price hits it. You're in long already. You were in long before the news event. News event drops and it respects that price action structure there. It respects the code of commands. But look at how it pulls everybody in short when it drops. Look at that large tail down. People chasing price. They got you. They got you to go short. And you hear people saying, man, I got smoked on NFP. I bet you did. I bet you got smoked, bro. You don't gotta tell me. You think I've done experience it myself. I know others have too. You don't gotta tell me that you lost your account. I know you did. It's down. But I'm already in the trade based on my methods. I would be in the trade already because I'm looking for longs here and price is gonna go higher. And NFP is definitely tradable. There you go. It's crazy because I had someone ask me in direct messages about how to trade NFP, and I literally answered. I said, "Hey, do the same thing that I'm showing you on NFP day. Just keep following it. Follow the model, and there it is. Boom, NFP. You just traded gold on NFP." There you go. For the video's sake, it takes so long. There you go. Price continues running higher. And we talked about this last Forex Fridays. Gold made all-time highs. Woohoo. We're living in history, man. Look at this. Gold made all-time highs. Well, gold in general, gold versus any fiat currency. I think there's only one fiat currency gold is not outpacing right now, but gold versus all fiat currency, gold just made all-time highs. Something's up. Something ain't right. You know something ain't right. Gold's making all-time highs, and we still trading, and we still out here using paper dollars that are declining in value every single day. Something ain't right. Dang, that's crazy. But that is gold on NFP. Now, let's look at UCAD. How many handles was in gold again? I'm not sure. Definitely a lot. Gold's flying. $8.30. It's a 15-minute time frame. Bring it back. What is NFP right here? Want it to be at 7. There we go. This is UCAD NFP. And I'm showing you an example that fails. Right? Same model, because everything's not guaranteed. Everybody thinks, I've done it now. I'm never gonna lose now. Right? That's people come across the content and say that. Oh, dang, I done figured out the whole thing. No, you did it. Because it don't work every single time. We're close to the truth. I wouldn't wait after the news event. Like if I could get in before the news event, I'm holding. That's the whole idea. I'm not getting in after the news event. I don't want to get in after the news event. The injection has already been put in. I'm trying to catch that run before the injection. If you get in after, I wouldn't really recommend trying to get in after NFP. My personal take on it. NFP drops, leave it alone. Any other news event like CPI, something like that, all right, you could try your wing at it and try to get in after the news event. But I would preferably tell people, if you have an opportunity to get in before the news, get in before the news. Don't get in when the news drops. When NFP drops, when CPI drops, when inflation rate decision drops, don't try to jump in the trade, because you'll be in a quick drawdown if you get it wrong. Quick drawdown. Buy side. There we go. The sell side. Play it forward. Price runs. Wait, hold up. Silly me. Sell stop. Buy stop. Up here. The highest high we have here. So we have to use that one. I'm answering these questions in these videos. Play it forward. 7 a.m. Opening price is here. You see that? So we have our premium versus discount levels without any indicators. Price runs that high. 1 minute. Looking for a fair value gap that breaks a swing low. Good example, just showing you what you should not be looking for. This is not the entry. I'm not sitting here telling you it cannot be an entry technique. It can be. It's all about probabilities. Who's to say that this fair value gap is the one price completely respects, gives you little to no drawdown, and continues selling off? Who knows? Who's to say this can't run back up another 15 pips before dropping back down? Who knows? So I prefer to wait for the fair value gap. Keep pulling it. Still hasn't formed yet. It's right there. So it's right here. Wouldn't be this one. Look again. Unless it is. Nope, it's not. Why? Look at where that swing low is. Closely. Look closely. It's on the end of that fair value gap. It's the same price point. Look at the low. 1.34540. Same thing for the high. Same level. So I'm not looking for that entry. It could be a feasible one too, but that's not the one I want. I don't like that one. I don't like that call to command. I want a different one to form first. And it's right here. It's this command. This is the one I want. That's the fingerprint I want right there. Boom. That's where I would look to go short. before the news event. Press play. We're knocked in short, but we get stopped. And then we hit TP. What are you going to do? What are you going to do? Right? What? You're going to tell me, oh, you should have opened up your stop loss any larger. How more unrational could that be? Sound like a gambler. Maybe we could just take one more puff. Maybe we could just take one more sip. No, we can't. We're at our ends. You can't try to open your stop loss anymore. You lost the trade. You're done. Move on. Drop the emotions. Drop all that stuff at the door. Check it, bro. Don't come into this market thinking it owes you something. It don't owe you nothing. Market goes up, boom, it goes short. You're done, bro. And even when you got it right, like you got to live with this. Watch. Even when price finishes off, you're just like, dang, I wish. See, price completely turns right around. So you could have had a counterplay here too, right? Let's see what happens when price takes out sell side, and for this run to go higher. I wonder if we get that same chain of commands to the upside, the same one, but just inverse. We do. It's right here. Doesn't look like we ever get the entry though on it. Price doesn't ever return back down into it. It's here. There goes that fair value gap. Price never returns into it. Price trades high. Price trades off of this fair value gap. Right. So there might be another entry technique that you prefer or that aligns with this instead and continues going higher. Me personally, I would have missed this one if I was looking for the long play here. Right? If I was looking for the long play, I would have missed that. But it's okay because the possibilities, like I said, it's always endless. It's always unlimited. But if we use the first entry, we wouldn't stop, I think. Are you talking about this one? Let me see. Price opens. I'm not sure. It's so fast. I would have to have the seconds chart. I don't have the seconds chart. We would have to watch this whole candle in its entire play. But I'm giving it the benefit of the doubt, and I'm gonna say it got stopped out. That's a good eye. It's possible that this entry was not stopped out. I don't totally know which way this market ran first. It could have ran up a little bit and then went short and then went back up high. You would have to watch the actual 1 minute candle on the seconds time frame to see how this might have played out. So scenario could have been a winner too, but I'm gonna just say it's a loser just for the video's sake. Just to humble myself, Hey, it's a loser. Let's look at another example. Let's look at DXY. You mean at 7:30? Hmm. 7:30, 7:30. Oh, you're talking about this one. Oh, you're talking about around here. That first fair value gap. Yeah, exactly. See? Yeah, exactly. This would have definitely probably, let's see, short here based on this fair value gap here. Yeah, possibly would have been a winning trade as well because the NFP comes around. Like I said, it's in profit for sure, but we don't know if it was up and down. It's gonna go for a while, honestly. Tonight's gonna go for a minute. It's probably gonna go on for like another hour and a half. Questions. If you had no questions, I'd be flying through it. But I I've kind of broken my own rule and started answering questions early instead of saving it for the end. Next time, I'm not going to do that. Next time, questions will have to be held for the end. Yes, that's UCAD. Let's look at DXY. NFP day looks just like UCAD too, right? Looks just like UCAD. 7 a.m. 10. Cool. We have our dead zone again. Double check. Yep. So that's the swing point here. It's also a double bottom. There's also another swing point there that lines up to it. That makes a double bottom as well. So there's two swing lows here. 1, 2, 3. 1, 2, 3. There's the swing point here. There's a swing point here. You have a swing high here. You can see it's not rated going into 7 a.m. So we're using it as a feasible one. Price comes up. Price comes down first, actually. Go down to the 1 minute time frame. Sheesh. So quick. Happened so quick. 2 candles. Right? 120 seconds later, this is what happens. Price runs up, takes out the buy side liquidity, and then shoots lower. Sometimes it's very difficult to catch some of these things. You can see here, DXY never takes out the buy side liquidity pool. What could we have done here differently? Like I said, we could have used a 5-minute liquidity pools instead, right? And refined it even smaller and look for other liquidity pools. Let's say we go to the 5-minute time frame. And you see here, there it is. There's a swing high here. It could always be refined. Just because you see me doing on the 15-minute time frame doesn't mean you could refine this down to the 5-minute liquidity pools. There goes the swing high here. It's rated there. Doesn't rate that one, but it rates that one. Go back to the 1 minute. Looking for the entry technique. It's there now. Because if you were doing it based off of this buy side liquidity pool via 5-minute, you would still be following the sequence of order here. There it is. The short. That's the entry. There goes a swing low right here. That is ran through with the fair value gap, and it's inside the fair value gap. There goes the entry short, going into what? NFP. Well, who's to say you would get stopped here? Probably not. I don't think you would. I think you would be good. Yeah, you would have been solid. Look at that. TP hit. Gone. It's nothing fancy, you know. I'm telling you, once you start comprehending this stuff, this stuff starts getting boring because you're like, you know it. The only thing that really gets me excited is the beginning of the month because I'm like, yes, like new speculation, you know? Because once I get onto the speculation, I start knowing the trend. It's just like, I'm just following the trend, waiting for the same boring pattern over and over again. Like, it's fun to go into a new month trying to anticipate what price is going to do. But there you go, DXY, NFP, Gold NFP, and UCAD NFP. Same setup for the New York session model, proven to show itself during the NFP. Rinse, repeat, journal. Exactly. Someone said it in the chat. Rinse, repeat, and journal. Done. So let's move on to the next topic. So the next topic needs your focus here. Like, I need you guys to focus here. Like, really think here with me. Really tune in. Like, pen, paper, do what you got to do. Tune in. Get in a quiet room, whatever the case may be. Like, really tune in because this is what I'm talking about when I'm referring to the larger pieces to the puzzle. There's always something larger to it. And then you have the abstract of ideas where people need to break down and take their time to see over and over again. But when you break down the abstract, the larger pieces, you'll be able to get to the abstract ideas a lot easier. So we're going to talk about the characteristics to a bullish and bearish market. It's our first idea. So I'm going to ask the chat, right? I'm going to ask the chat a question. So I'm trying to engage you guys. I want you guys to be engaged. I want you guys. Where is the chat at? I can't even find the chat. There we go, chat. All right. When it comes to a bullish month, right? Let's say the month is bullish. What are some characteristics that come to mind? When you're thinking about a bullish monthly candle, what are some things that come to mind? I want to hear any thoughts, any idea, right or wrong. Doesn't matter. You're all here to help each other. We're all trying to get to the same table. See what somebody said. All these new messages. Hold on. All right, cool. All right. First one, someone says swing low forms under the monthly opening price. Correct. That's a good answer. I love that answer. That's a great one. Open retracement ALD shoots up and shoots up. Okay. Swing low below open. Correct. Good answer. I like that. Previous swing high swept. High swing. Good answer. Swing high broken. Good answer. All right. Those are some great answers. So that's the bullish condition. So let's start on the bullish condition. So those are all good answers. Let's look at DXY. And we're going to be looking at where is it at? We're going to be looking at, there it is. February 2023. Now we're looking at this from the daily time frame. Not looking at this from the weekly. Daily is my friend. I love the daily. Daily is my best friend. Best friend when it comes to trading. Let's take a look at some of these things and how this month finished up. So if you go on the monthly chart, you can see here, look, this is February. This green candle right here. It's February. Let's take this off. That green month is February. But let's look at the data day by day that adds up to this monthly candle and how it gets to the here. How it opens, drops down, runs up, makes this high, and then drops off and then closes. The open, high, low, and close. That's what we're observing here on the daily chart. Someone said looking for a purge and revert on the daily chart. Correct. Absolutely. We're just looking at this. We're cherry picking, but if you go back to 2023 daily updates, I was tracking gold for the month of February. So if you go back on my YouTube channel, go to 2023 daily updates playlist, right? And go into the month of February in 2023, you see I was tracking gold that month and I was calling it lower. And I was also using the intermarket analysis talking about dollar going higher. But based off of no macro information or seasonalities or interest rate differentials or this, or third, just look at the characteristics to how it's being played out. We start to add those things on top of that as we start to understand how the market flows. This is the opening price. Question: what is the opening price? What do I call? What do we define the opening price as? It's a two-word. Starts with an F and V. Thank you. Fair value. And can someone in the chat define to me what fair value is? Anybody in chat, just define to me what you think fair value is. Anybody in chat? Premium equals this discount. Close. So fair value, the definition of fair value is you're not paying a premium and you're not paying a discount. It's fair value. It's the opening bid. So no one's paying a premium and no one's paying a discount on this price point here for DXY at 102.95. It's not overbought and it's not oversold. It's just fair. Oh, that deal, that sounds fair. I'll take that deal. It's fair. It's a start. You can see price drops below the opening price. And what's below the opening price? What do we call that? What kind of territory is that? Also, good word, Lenny. Fair value is also equilibrium. Manipulation, correct. But there's a term. What's below? There we go. Discount. Good job. Shout out chat. Someone in the chat said it's discount. That's the answer I was looking for. Price is below the monthly opening price. It's in a discount. So we could see, just off of hindsight, look at how the dollar pulled itself below the monthly opening price to go higher. Good. Wow. Let's add some more context to this. How did price get here? Let's reverse engineer it to the beginning of the month. Let's go here. The month starts with a huge down candle, right down. It raids sell stops at said point. The fact that you guys saw this going higher and you guys know that February finishes up, what can we define this run as? A false break or most likely a continuation? Based on what you know in hindsight already, knowing where dollar ends up at the end, is this a false break? Yes, it's a false break. I'm basically trying to spoon feeding you guys the answer. This is a false break. Correct. It's a false break. How do we know that? Because price ends up going higher after breaking this low. So this was a raid on sell side liquidity. Cool. Let's play it forward. Price comes up. We know it's a false break very early on to the month, right? Here. Because after breaking the swing low, it makes a swing. It breaks a swing high. We don't want that because it changes the direction of where momentum is going. I define the break of swing lows and swing highs as momentum. Natural momentum. It's not an indicator that I need to show this. The swing points are very influential to price. There's a lot of orders residing below this low. There's a lot of orders residing above this high. There's also another swing low here too. 1, 2, 3. You can see there's another one right here. That's a swing low. So it's running sell stops there. But instead of creating a lower swing high, because that's what the bearish formula would say. The bearish formula, right? The way I like to identify trend and the variables for the formula is for the bearish formula is swing low broken plus lower swing high equals bearish trend. The swing low broken is bearish momentum. But to confirm that bearish momentum lower, we need to see a lower swing high. Do we get a lower swing high? No, we do not. We get a break of a swing high. So the formula is incomplete. We can't complete that formula. The formula now goes back to what? Break a swing high. That's bullish momentum coming into play. Granted, the context we just ran sell side liquidity. We just purged. Are we looking to revert back higher? Possibly. How do we understand whether or not we could be confident and confide into that bullish momentum? We need a lower swing high because that's the other variable to the equation. Break a swing high, which is bullish momentum. To confirm that bullish momentum, we need the other variable, which is a higher swing low. It needs to be higher than the most recent one that forms after the break, and it's this swing low here. So this is the swing low. That price needs to be higher than. Let's play it forward. There we go. 1, 2, 3. That's a higher swing low. At this point, I now have more confidence to buy dollar. Boom. There you go. There goes the confidence right there. I'm more confident to buy dollar and say that and strongly say we're in a bullish trend. I like this. Now, just on its own is decent. But if you're looking at other correlated and inversely correlated pairs, you want to see opposite happening as well. You'll see that when we look at gold for February. You're going to see the complete opposite of what dollar is doing here for gold. Price breaks a swing low. At this point, what can you do? You can look to be long any day going forward after this higher swing low. But going long needs to be below in a discount territory. However, you find that by your means. I've gave you a couple means to go feed yourself some type of setup. If you don't want to take that, you find your own way to find a long setup. You don't have to take my advice. You can find ways that you prefer. And you will be long any other day going forward to the end of the month, unless you see a change in trend. Or the other question, the other thing you can do, right? That was A. This is B. B is you could wait for down days. Someone just said it in the chat too. You wait for down days. And these down days in a bullish trend, I like to call them counter trend candles because it's opposite to the trend. And it's another natural price indicator. It's a very natural one. It's so subtle, a lot of people don't even realize what I'm talking about when I say it. They miss it because when they see the down candle in a uptrend, they think, "Oh my gosh, the sky's falling. The price action is going to reverse." No, it's not. Unless you really have unless there's some dire reason for price to reverse, it's likely not. And if other markets are telling you that, like if you have an S&T divergent, then okay, there might be a reversal pattern that might be coming in. Let's play it forward. We got a down candle. Let's see what happens after this down candle. Let's play it forward. Price does end up trading lower, and it does end up closing up. But let's just say we take a loser on that day in general. Let's keep playing it forward. Price then still is long. So that remember that first option A is you're still looking for long positions. You can see here what happens here. Sell stop raid. It's another false break. Which is why I try to tell you, sometimes it's hard to have a trailing stop, even as a swing trader, because you're going to have false breaks. Because when I place my stop loss below a swing low, what happens? The market runs it. Let's play it forward. We got a down candle. What happens after this down candle? Price inevitably trades higher, but it ends up closing lower. Let's say we just took a winner on that one. We had price trading up to the previous daily high going into Friday. Friday should take out Thursday's high. Some type of entry to go up. Just keep playing it forward. Another down day. That could be another opportunity to go long. It closes up. It takes out the previous daily high. So let's say we took profit there. Intraday. Another day, we're still going long. And you start to see how you can start catching trending environments. So that's a few ways to go long. Or you go down, like I said, I was showing you intraday. You go down intraday on each one of these days and look for a London setup long, a New York setup long, an Asian session long. If not, if you want to play counter, which is a lot more riskier, and it does happen, you can play shorts as well. But you're seeing how this was a beautiful month. 2023 was a great year. Like 2023 was a great year to trade. Not gonna lie, it was markets were moving really nice. The PDA was just the structure, everything, man, on point, bro. Notice as well, we had a fair value gap. More specifically, look at that entry. Haha. Look at what it looks like. It looks just like the entry that we talked about on the 1 minute time frame. It's a fair value gap that runs to a swing high, and the swing high is inside the fair value gap. This is a busy, right? Busy meaning it's a buy side imbalance, sell side inefficiency. The fair value gap is going up, right? For my ICT nerds out there, right? What you're seeing here, what I'm showing you here on the daily, is a fractal idea. I just showed you 1 minute entry techniques. That same 1 minute entry technique is shown on a larger portion, right? A bigger goal, a bigger shape on the daily. Price trades into it. There's a long setup somewhere in here, and price trades higher. So on this, you would probably be looking for, if you were going from the daily down to the 15, down to the 1 minute, you'll be looking for a long opportunity here during a kill zone. So any time during the kill zone, you're probably looking for a long. New York session looks to turn around here. 1 minute. We don't have the data available. Let's see how low we can go. Dang, trading view, can't even go on a 3 minute. Pay all this money, you can't access certain things. Trading view, man, count your days, bro. Count your days. But yeah, Fractal idea. You'll be looking for a long setup there during London, New York. Once it gets in there, that's when you're looking for the setup. And during that time period, look for the long based on the entry technique. You would have to go down on lower time frame and resize things. Go on the 4 hour, go on the 1 hour, 30 minute, 15. Really want to dial in that entry, get a good entry, understand where price is going, and you play it all the way through. Oops. And that's DXY. That's a bullish month. Take a look at that. Journal this, right? This is data. This is more ideas. You can go back and look at how all bullish months form. Guarantee you it has these similar characteristics. It's creating higher swing lows. It's creating higher swing highs. Look at all the swing highs. Look at everything that's going to be in red right now. Everything that's in red is going to be a higher swing high every single time. That's bullish price structure. It's inevitable that you're going to get raids. What are you going to do? You can't control the market. It's the game you signed up for. You can't do nothing about that run on that swing low. I know. Yes, they stopped you out, bro. Me too. They stopped me out too, bro. Thanks. Live with it. Move on. And price keeps trading. You should be able to take losers, right? Why? Because you're risking properly. You're managing your risk. You're reducing your risk. You're going from the daily, maybe down to the 15, then to the 1 minute entry. Somebody asked me, how do we reduce our risk? I'm like, reduce? Man, I'm showing you a 1 minute entry. How much more reduced can we go? We're in the 1 minute time frame. I can't reduce it anymore. I'm not paying for 30-second data and 20-second candles, and I'm not paying for that data. Expensive. Too many bills to pay. Pay as least possible money to these platforms. And that's a bullish month. Let's look at gold. Remember, we just talked about February being bullish. Sorry, February being bullish for DXY. Now I'm gonna ask the chat again. What are some characteristics to a bearish month? If you had to look at what a bearish month looked like day by day, how would you draw it, and how would you like to see it fit? Anybody in the chat can answer this. Freaking eyes are burning me, man. Sheesh. The opposite. Good answer. Good answer. Can you be more specific? Expand on that. Yeah, swing high above the open. Good answer. Swing low broken, then lower swing high. I like that. Lower swing highs, lower swing lows, swept. Sell above the open. Good answers. Right. Good. See, I'm just trying to engage you guys. Get your brain thinking. Think. So just looking at it again. Got the opening price for gold. What is above? What territory would we call this? Above the open. What's the word? Begins with a P. Premium, exactly. Now, just looking at it from hindsight data, you can see how gold pulled itself in a premium for a short period of time, only 2 days, and then sold off. You can no longer get the best sell for the month. According to hindsight, we can see that the best sell came on these 2 days. The best, the pinnacle, right? The cream of the crop sell happened right there on these 2 days. After those 2 days, everybody else is now forced to either think that price is going to go long, or they're going to be forced to get it correct and sell in a discount, which is not the best case scenario. But what else are you going to do, right? What else are you going to do? You have to sell because the market is trending lower, and sooner or later, that sell that was the best ever is no longer going to be there. This is something I like to tell a lot of traders. The best conditions in the market, they don't last long. Mm-mm. They're quick, in and out. Only the most attentive traders, or if you're lucky, the traders that are on their P's and Q's, they're able to get these entries. Someone said seeing the entry sequence but not at premium. Exactly. It's gone. The sequence is still going to continue, but in a discount. The whole idea of price trending lower is going to now happen in a discount. How else is the month going to finish lower? It needs to be selling in a discount. Let's take a look at how this looks like on the monthly. Look at that, February, down candle. Something's on. February is a down candle. Go back on the daily. Look at it. There's a swing high that forms above the open. That was most likely the max short or the heaviest distribution that was occurring right there. That was where the commercial speculators were getting their best sells right at that high, right there. They got the best sell opportunity there. Now, is there a model to potentially catch this? Yes. You got the Larry Williams smash day candle idea. That's why I love this idea. But we're not going to talk about it today. Price makes a break on a swing high. We can call this a false break. Why? Because we see after breaking that swing high, price breaks a swing low. We're like, what? It breaks a swing low instead. It completely went against the formula. It broke a swing high, bullish momentum. We should see a lower swing high continue up. It doesn't happen. Instead, it fails to do that. It just raised the high and then it goes short. So now we're following bearish momentum. And if we want to be confident about this going lower, you want to see price do what? We want to see price make a lower swing high. And that's where, after making that next lower swing high, we could be confident going into market short every single day. Sometimes it doesn't form that lower swing high and the market just sells off. That's what you're seeing right now in dollar and UJ and some other asset pairs right now. You're not always going to get that pullback. Sometimes the market goes hyperbolic and just sells every day. It just drops, declines, distributes heavily. And you're only getting small blimps of premium sells intraday, up and then down and then close. Open, high, low, close. Let's play it forward. Gold prints up close candles, up close candles. This could have been a short day because after this day, I would go short. You could take looks like you would have been a loser. Let's take another short the next day, loser. But let's take a short after this day, winner. And this one candle takes out 3 lows, 1, 2, 3. It also creates what? The same thing the dollar is doing, but inverse. Runs a swing low with a fair value gap. This is a SIBI. It's a fair value gap that's going down. Sell side imbalance, buy side inefficiency. Price is going up, and then gold is selling down. But you can see there goes that market shift. And then there goes what? That lower swing high. Structures being supported on gold on the daily time frame for price to go lower. After this, we could go into every single day more confident looking for shorts. But at this point, we're selling at a discount, and we have no choice but to. We're forced. After an up day, look how it shorts. Up day, short. Up day, loser. Up day, loser. Winner, 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 loser, loser, loser. And there you go. I'm not guaranteeing saying that, oh, every time we get into these trades, there's not winning trades here. But just based on the direction and just trying to be, realistic here and being fair. I'm not going to say, oh, you can win every single time. You're going to lose, man. You're going to lose. And there goes February. You put that side by side with DXY. And it's completely opposite. Look at that. For February, it's completely opposite. I'm showing you market correlation here too. I'm showing you the correlation between gold and dollar in the same way of me explaining trend. You can take any pair. Doesn't matter. Someone give me a pair. Say a pair and give me a month. Someone give me any pair and give me a month, any year. And it has to be an obvious candle, an obvious month that is showing up movement and down movement. So we can have a good example. Give me any pair. Someone type a pair in the chat. Give me anything. Anything that you guys want me to look at. Pair. Forex pair. Same thing. Hey, we could, but let's focus on the Forex pair. Someone give me a pair. Okay, cool. Okay. Pick a month. Give me a random month. Banks. Any month. March. March of what year? Don't say this year. We're still in March. Okay, 2023. Okay, cool. Good. All right, March of 2023. We can see good answer. This is good. This is good. I could already tell. Odds are, and I don't look at this pair, but just taking the educated guess, knowing what we know about the market, I could already see, okay, it's an up close candle. Let's take the hypothesis, right? Or the educated guess. My thesis is that price drop below the monthly open created multiple opportunities for us to go long with swing low formations. Price broke a swing high. There was at least one busy to the upside. It may not have created a market shift with the fair value gap inside the swing low. Inside the fair value gap, but there is probably large fair value gaps to the upside. And price creates higher swing lows inside of it. Price creates higher swing highs, and price buys after down days. Let's take a look. Go on daily. March, April. This is the opening price. There's one thing I forgot to mention. Price gets traders on the wrong side too. So this is GN, British pound versus New Zealand dollar, bullish March 2023. That's the opening price. Look how price drops below the opening price. And this is every single day of the month. So you got a couple weeks to really capitalize on the trend. Got to be on your P's and Q's. Price creates a fair value gap here. Look at that. We got one. And it creates what? Like I said before, it's most likely going to create the higher swing low inside the fair value gap. And I never looked at this pair ever. I don't ever trade this pair, bro. There you go. Higher swing low. 1, 2, 3. 1, 2, 3. Price here. 1, 2, 3. It's higher than that one. But there's also what? A sell stop raid. Sell stop raid. Raids that. False breaks. Runs higher. Another fair value gap. On the daily. Price respects it. Trades higher. At the open too. Yeah, there's a fair value gap to the downside though. It's a fair value gap down. Unless you're using this as what's that other PD array? I don't use that PD array, but the fair value gap that fails but turns resistant, turns support. Yeah. Yep, inversion. See this? Yeah, an inversion fair value gap. See this fair value gap though? Trades into it. Higher swing low inside of it. Oh, this one you're talking about. Ah. Wow. Look, there it is. 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 Look, there it is. There it is. Oh my gosh, bro. Come on, guys. You telling me this market's not rigged? It's showing you the same characteristics in a whole nother pair. Come on. Look at that. 1, 2, 3. Swing high. Fair value gap right there. Bro. Man. It's eye-opening, bro. It's eye-opening. And I'm telling you, information like this should not be shared publicly. I can see how this could like be a problem if people really start to learn this. You really start to think about, like, imagine the masses learn how to trade really good. It would just drive the market insane. There would have to be consequences to this. If everybody in the world figured out how the markets worked, it wouldn't work. I think it would fail. I think the market needs people to fail. And there we go. The market continues trading higher. Creates what? Higher swing highs. Look at this. Higher swing high here. There's a lower swing high here, but it gets ran out real quick. Higher swing high. Higher swing high. And then the end of the month, we're done. Because it makes the high of the week and it closes off lower than it. That's the close of the month down here. Right? So go on the monthly. Makes the high, comes down, closes there. Done. Moves on to the next month. Does that make sense, everybody? If that makes sense, please put yes in chat. Like, anybody, just put yes in chat. Tell me, let me know something, man. Like, I hope this makes sense, bro. When you start looking at it this way, you're like, oh my gosh, bro, this stuff is rigged. It's rigged. Let's take it. Someone give me another pair. Let's do one more example, and then we'll move on to the next topic. Someone give me another pair. Any pair. Like, someone said NQ. Evan, bro. All right, futures, whatever. You want to look at the futures? Bet. It makes no. It's the same thing. All the markets are coded the exact same way. Doesn't matter. Give me a month. Someone give me a month. And the month needs to be a good example of like a large candle. Give me a month. Not a small candle, a large candle. March of what year? 2023? Nah, I'm cracking up right now. I'm cracking up. March 2023 is a hitter tonight. Okay. I got you. All right. Some observations. Same thing, bro. Price dropped below the open. I could the educated guess, right? The thesis is that going back test this, if we look at this from the daily chart, we know that it got retail traders on the wrong side. A lot of retail traders went short on the minis here in March, and they got it wrong. They got burned. Price created some type of market structure shift with a fair value gap to the upside that either breaks the swing high and the swing high is inside the fair value gap, or there's just fair value gaps in general that are respected, and price creates higher swing lows in that. After down days, price trades higher. We have higher swing lows that form and higher swing highs. We also have potentially false breaks during this month. Price raids swing lows potentially and then runs higher, or there's none at all, and it's just that perfect. So let's see on a daily. Let's go to March. March is a hitter today. All right, cool. Got multiple. So on this example, right? Look, we have more than one fair value gap that forms below the opening price. So you had a couple opportunities to get this at a cheap buy. Yeah, this day, this day, this day, this day, this day, this day. You had a couple days here, about 6 days, to find a cheap buy before price exploded to the upside, before being forced to buy in a premium. We can also see we have that fake raid on buy sell stops. below that low, trend completely changes. Raids to sell stops, and it runs up and takes out this swing high. Doesn't matter what we're looking at, right? Try to tell you guys, doesn't matter what we're trading. The same thing follows suit, bro. They're all rigged the same way. We went from FX to futures. Watch, we're gonna jump into a stock. We're gonna look at like probably like Google or Tesla or something, and we're gonna see the same thing. Yeah, we'll look at Tesla. You look at Tesla. We'll look at Tesla next. Swing high broken. What is that? Got a fair value. Odds are makes a higher swing low inside this range potentially. See, doesn't sells off more. It is what it is. Price comes. Oh, price actually creates a sweep again one more time. Sweep sell stops one more time again. Then it runs back up and takes out swing highs. So it's not always perfect, but if you follow the formula and the steps of the swing points being broken, you're always most likely going to get put on the right side. Swing high broken. What are we going to do? Wait for a higher swing low. Right there, you got a higher swing low. It also happens to form where? Inside another fair value gap. With the same entry technique. Oh my gosh. It's a fractal. Yes, the raid. Good answer, Lenny. Good comment. Someone said, I see we should be waiting for the sweep and ride the tide. Right? Exactly. Because there's only two ways the market is going to form the bullish trend. It's either going to break a low and then trade higher, or it's going to fail to break a low and then trade higher. There's only two ways, guys. Only two ways the bullish trend is going to start kicking into gear. Once you start to understand this, everything becomes a lot more clear. Then we can start talking about the abstract ideas. Because if you don't know trend, you're not going to understand the lower time frame. Swing low rated here. Another swing low rated here. But eventually it gets back into trend. But the best trades normally happen when there's destruction of orders. There's like this clip of this guy. I forgot who was. I don't know if it was Marcus Douglas. Somebody had something legend in the trading community. I don't know who it was. He said that the best trades happen when there is a destruction of orders, and that's not his quote by quote. But there's definitely something that's happening when price runs a low. Even sometimes the previous daily low is just enough, and then price trades higher. Play it forward. Down candle. What can we do after that down candle? Look to buy. Look at that. Price produce a up resulting candle after this down candle here. Where would you buy? People ask me all the time, where would you buy? If I'm doing it from a daily time frame as a swing trader, this is what I would do. I would put a buy stop order at the down or the close of that down candle here. Buy stop order. Sorry, buy limit order. I'm buying on weakness. I would place a buy stop order here, buying on strength. And you can see it taps into it and it runs higher. And that's where profit would take. I'll try to aim for what? The previous daily high. Or let's say this wick here, cut this wick in half. 50% of that range of that wick, I want to see price eat into. There's so many ways you can cut this down. Like, it's so many ways. You got to make up your mind. I can't tell you every single one. I'm only telling you the ones that I agree with. There's so many methods out there that are among the great, whether it's through ICT, whether it's through Wyckoff. I don't truly believe in Wyckoff heavily, but I see there's people that do make feasible money off of it as well, right? Or find results in it. Okay, you have Larry Williams. You have all these other theories that have sound logic behind it. Figure a way to utilize it. Down candle, buy after, loser. Down candle, buy after, winner. And keep buying. And keep buying. It's best to obviously find a swing trade because it compounds over time. You don't even have to do anything. Once you find the best buy, you look to trade. That's what I said. Every 20 days, I'm looking for a swing trade. Every 20 days. I can almost guarantee you if the market's going to trend, you can find a swing trade that month if it's going to trend. And I generally would like for it to happen during the beginning of the year. So like January, it's still a good year. People tell you not to trade January. January is a good year to trade if you know what you're looking for. The trend formula is all written in this right here. Swing low broken, false braid on swing high, price sells down. Price creates a fair value gap that breaks a swing low here. Price trades into it, short right there. So it's messaging me while I'm on Zoom. Um, price comes up and goes up. I'm also noting that the best trending months occur after 5 to 6 days trend. Should be trend and confirm. Yep. The first week, basically what you're saying. The first week. The first week is where everybody gets flushed out. That's the NFP week normally. That first week, right here. Look. So this example isn't the best, but it's either the first or second week of the new month, and then price is then going to start trending in its true direction. The first or second week is normally going to be the fake out. The third and the fourth, or like say like the month is a little longer, you have like another half week at the end. Those weeks will most likely move in the market's direction. Those first 2 weeks, you're trying to find a position. That's for the swing trade idea. Those first 2 weeks, you're trying to find a position. And sometimes that position gets stopped out because let's say you were long here, going higher, look how it knocks you out. Because you could be scaling, right? You could be moving your stop loss as price trades up, but it ultimately stops you out. And you have to find another way to get back into the market again and go long. So let's look at Tesla. Someone give me a month, not March, please. Not March 2023. So people don't think this is rigged. Someone give me a month, any month. It could be up month, down month. Pick a month on Tesla. Anybody, September. What year? 2023. Okay. All right. It's a small range, small one, but not a bad one. More consult. You could definitely tell that this market was less likely trending. Just look at the candle in it itself. You could see that the market most likely was consolidating this month. We're going to look at it anyways. Not the best example I would pick, but we'll look at it anyway just to see what this month did. So some observations. I see it closes down. So I can make an assumption that an educated guess that it moved above the opening price. It caught a lot of retail traders off guard to go long, to increase in call options to push Tesla higher, thinking Tesla was going to go higher, but it didn't. It went lower. I can see it rated the previous monthly high, so it rated buy side liquidity above this monthly high, August's high, and then sells off. I can also take an educated guess that price is making lower swing highs and lower swing lows, and after up days, they're selling, and there are swing highs that form above the monthly opening price. Let's go down to the daily. Yeah, it's a choppier month. You can see it's just choppier month, but we'll pick a better example. We'll pick a different month that we can really show the example better with. What we can see, it's a down month, and you can see how price gets above the opening price and sells above it to finish closing lower, finding the best sells up here. A lot more gaps. It's Tesla, of course. Stocks. You're gonna see big gaps like this on the daily a lot often. But you see the same trend as well. Price breaks a swing high here. It fails to make a higher swing low. Well, it does actually. 1, 2, 3. But then it breaks that sequence of going higher. It breaks the swing low. It gaps right through a swing low here. Then it creates a lower swing high. And that's the end of the month. And then it even raids that swing high as well. You play it again. It sells off. It continues to trend lower out of this month. But you can see how this month was consolidating. Let's just look at another month that gives a well sought example. So I'm gonna say QQQ, April 2022. All right. April 2022. All right, cool. Talking about COVID, man. Ooh, we talking about global shutdown, man. Ooh, data. I got the data. Okay, so it's an up month, and I'm only gonna guess that price caused a lot of traders to go short, run back higher. You can even see that the previous monthly candle rated sell stops. So you can see how there was a fake raid for it to go lower. It continued going higher. So everybody that thought the stock was going to crash or the stock market was crashing, whatever, it made a strong recovery. And this is around the time the Feds were what? Increasing the rates. All the central banks around the world were increasing the interest rates. US stocks, of course, were mainly concerned about the Feds. The Feds start increasing the interest rates, stocks go higher, yields go higher, bond yields go higher. So we can see here, daily, April, the end of April, and gappy, of course. I'm not looking at the ETF. But here we go. Swing low, right here, below the open. That swing point forms below the opening price. That's the open right here. And then you start to see, oh my gosh, they all form very similar in a similar fashion. That's the opening price. It drops below the opening price, creates a swing low. Price breaks a swing high here. After breaking that swing high, do we get a higher swing low? Yes, we do. We get one right here. This swing low is higher. It's higher than that one down there. Price is trading up. After making this higher swing low, you could be looking to go long on QQQ. Looking for call options for a higher price action. And if you play it forward, leaving the month, you can see after the down days, there's buying, down, buying, down, buying. Press play, and those call options end up running higher into the next couple of months as well. And you'll see the same thing repeat. You can see May is an up month. May drops below the open of its candle there, right there. That's the open of May. It drops below, and then it runs higher. You think the market's still not rigged? Come on. Nobody wants to show it this way. And I'll be the first to continue to keep putting out to the community. Look, there it is. It's rigged. It's tricking people. But to get to the trend or to be at the top, of your game, it's very difficult to get there. I'm not saying that I'm not there yet. Still working on it. Still working on it. Still always room to improve. As a teacher, you can always learn something. But that is our bullish and bearish months. That's our way of characterizing them. It's a very simple idea. Now, the last topic is going to be fractal ideas on the lower time frame. And I really want to spend time on this during a kill zone. So it's just going to be mainly going to be looking at some London kill zone. And I think we're going to mainly look at let me look at gold. I think gold had a good London kill zone to show this fractal idea. We've already been showing fractal ideas in general, but there was a London session I wanted to talk about. Ah, there we go. So the NFP Day London session. So here on the 1 minute, let's talk about trend again. So when a bullish trend unfolds, you're simply getting higher swing highs and higher swing lows, always, constantly. And in that trend going higher, there's also going to be sell stop rates. Look at how the market produces everything they were talking about from a higher time frame perspective on the 1 minute chart on the London session. We can see it clearly drops below the open. You can see that it's clear. That's a fractal idea. It's in a discount. We can see how price creates fair value gaps to the upside, and some are respected really well. We can even see price gives those entry techniques, fair value gap that has a swing high in it. Price trades into it there, runs higher, even though it's in a premium. So you see you're forced to buy in a premium, but nonetheless, the fingerprint is still showing itself here. It's just better to catch the fingerprint down here. And it does form down there. So there was also a London session set up before NFP. Here. There you go. See that? Fair value gap there below London Open. Price is trading higher. Doesn't run a 15-minute swing low. I don't think it does, but it still produces an entry technique below the opening price. It's just missing the sequence of breaking a 15-minute swing low first and then printing it. But you still see in a fractal idea prime price in time, you see it's happening there. And then also notice as well, you're also getting what? Higher swing highs and higher swing lows, and you're getting those raids. So there was a raid here. This is the last raid during the London session here, the final sell side sweep. And after this sell side sweep, price continues to make higher swing highs. So price raids the swing high here. There it is. There goes the trend changing right there. Swing low broken, false break because price comes back and takes out a swing high. It's the same thing I showed you on the daily chart, but on the 1 minute. Price is breaking a swing low just to run back and break a swing high. Nothing different here. Price then creates a higher swing low formation. It raids it. Then it creates another swing low formation, continues trading a higher swing low formation compared to the first one that forms after the raid. Here, and then you start to see what? Higher swing lows. But notice all the retracements and all the raids. Look at that. It's going to raid swing lows. You know that for sure. Look, this one gets raided. Here. You had a stop loss below it. Oh well. Market took it away from you. Just so many on the chart right now because we're on a 1 minute time frame. So there's a lot more data, right? But it's a fractal idea. All of it is still happening over and over and over again. And on the flip side, the same. I'm not going to draw out every single one. It's kind of tedious now. But on the flip side, you're also getting what? Higher swing highs. There. Just put it on average. Here. Something here. Another one. And this is a lower one. That's a lower one. And then it starts getting higher again. Right? It looks like it fails. Looks like a mitigation is going to happen, but it doesn't. High swing high. Another one up here. Another one up here. And then you start to see how the market is just all fractal. I showed you this on the daily. I'm just showing it on the 1 minute during a kill zone. And then you could take these same ideas to help you find pyramid setups because you know where likely the price is going to retrace down into. It after down candles. Look at all the down candles in this kill zone on the 1 minute. Look what happens after most down candles in this up closing London session. You most likely get a strong dynamic move away from down candles. If that's not an indicator, I don't know what is. And I'm not talking about a man-made indicator, a natural price indicator. Down 1 minute candle, buying happens after a down 1 minute candle, the same way you see it on the daily chart. You see the market as well turn into two different cycles. What are the two natural range cycles you see here? Anybody in chat can tell me. One begins with an L, the other one begins with an S. There's two natural cycles that's happening here. Anybody can tell me. You have no idea? Just say you have no idea. It's okay. There we go. Small to large. Good answer. Shout out to chat, man. Shout out to everybody that came out tonight. Yeah, small to large. That's what you see here. You're seeing it. The same thing you see on the daily. One day is super tiny, and then the next day is super large. You're seeing that on the 1 minute time frame. You're seeing candles that get really small. It's literally not even going anywhere from its open. Look at this. That tiny candle right here. It's just an example. There's so many here. We could like nitpick and pick every single one and cherry pick every single one, but small candle. What happens after the small candle? Look how large the candle comes into. Down candle. What happens after the down candle? Odds are you might see buying. Unless we got some type of fair value gap. Right? Fair value gap, that breaks the swing point. Trades into it, makes the higher swing low. But it's ultimately still, its goal is to do what? get away from the down candles, get away from the order block theory, get away from it. And when if we get price to trade back into that order block theory, we could potentially think that new buying should be occurring. Look at that. Price trades into that order block. New buying happens. 3 down candles. There should be new buying if price trades into it. It should respect it. Right? Price trades into these down candles. We should see respect to that zone. That's what's happening over and over and over again until price is booking up enough orders to be overbought, and then it finally changes trend again. It sells off. It takes out all the engineered liquidity. Play it all the way through. Right? You got that trend line building up, right? Some traders, let me draw the trend line. Every time it touches it, I'm going to buy. Okay. See how long that holds up for. Every time it touches it, I'm going to buy. And they hold the buys, right? And they redraw another trend line. Like, that's another trend line. I caught it. I finally caught it again. It's underneath my trend line, guys. I got it. And then, boom, market wipes everybody out on that trend line every time. So, hopefully this was insightful. I think that's our final topic. I think I hit everything today. Apologize for being late. Had business to take care of what I was going to do. I was in traffic and I didn't eat all day. So, and I said 9 p.m. start. But I appreciate you guys coming out tonight. If you have any questions, please let me know before we go. I'm going to let you guys off and enjoy your day tomorrow, whatever you're up to. Hope you and your loved ones are safe. So if you have any questions, let me know right now. If not, I'm gonna end it now. I'm gonna head to bed. Talk to you guys next week. No problem. My pleasure, guys. Absolutely. All this is gonna be on YouTube. I recorded it. You should be able to see everything. I put the timestamps in it and everything because sometimes, like I said, I go off on a little rant and it goes into other topics that I like to talk and discuss about. It's so much to talk about sometimes, like so much. And I'm super passionate about it. I love it. I fell in love with it, man. All right. Seems like everybody's solid, man. Seems like everybody's solid. So I'm in the chat. You got any questions? Reach out to me. Don't be shy. You don't have to ask me if you want to ask the question. Ask the question so I can answer it directly and right on the spot. All right, guys. It's been nice. Peace.